Hello, everybody. We are back with another live session. It's the opening bell. I'm joined again with Richard and Igor. So the same trio from yesterday, same session.
Yes.
Hopefully a bit better. How are you guys doing today?
Deja vu. No, you're doing well. I'm doing well. Thank you very much.
Yes.
Awesome.
I'm cheerful today, yes.
Excellent. Sounds like you got a trade in then, Igor, yesterday.
Yes.
You did? Very
Yes, I tried something, but I don't know what will happen, but we will see.
Awesome. Well, yeah, something you could share then today. I managed to get a trade in yesterday after the session. Luckily, I did actually screen record it. So I can, if there's nothing for me in this session, I can actually show that as a video, so to speak. So a little bit, should be an exciting one. Just going to wait for a few people to fill in, come into the actual live stream. I can see it slowly starting to populate. But yeah, and it's looking good. S&P 500 was finally moving up a bit. So I'm excited now. I'm excited. I'm hoping the bear trend is gone and finished.
So you're not a closet bear then, as they call it.
No. S&P 500 should be bullish. That's my take on it historically. If it drops too much, it makes me a bit nervous. But it looks like it just saved itself. I think it dropped to almost 10% or something already. So, just about starting to save itself now. So it was getting close, though. It was getting close, but we're not out the woods yet. I mean, anything could happen. Exactly. The viewers, hello everybody. If you are in the live stream, feel free to post a comment, ask questions, do all that good stuff. We'll get to you ASAP if you have any questions. Yeah, it'll be awesome. But I think we can pretty much start, to be fair. I can start seeing the viewers coming in now. So awesome. All right, let's start this live trading session. Who would like to go first? That's always the question.
Okay, I can start
Igor?
first if you're interested about CPA because I monitor whole day.
Yeah, you're the fundamentals guy. So yeah, that's a good place to start. Go for it.
Okay, I will share just the screen to the Forex Factory. So, okay, so today we had a CPA. And as everybody knows, we have very, very poor data for the US dollar. And right away after this poor CPA data, I started to watch the polls around the internet and the market sentiment. I see that a lot of economists talking about June that maybe US will cut the rates now because all these data now can just push them to faster cut the rates. And of course, US dollar outlook is bad in this moment. And this is the way, because I have a much larger data right now. Maybe you can see here. We had several times during the last 2 years when the US dollar CPA was bad than expected. And almost every single time we saw some kind of the push of the euro dollar and British pound dollar up. And today I will just explain what's happened in my point of view and why I reacted. And we will see what is about. So I will just show what I'm looking for here. I will do that just a moment. I will share trading view right now.
Awesome.
This is maybe I a little bit be rushed this time, but I will tell you what's happened. Yesterday, Sam, you were my inspiration.
Oh, okay.
So to watch the volume more, watch the volume more than other times. So because this account that I have, I don't have premium. So I've tried to find somewhere that I can see the volume footprint, and I find some indicator. It's called activity and volume comparison. and I put it on the chart, and I was using them on the screen during the announcement. And what's happened here, I will just explain what's happened. So we're in the bullish move. Today, my bullish bearish invalidation point is 1.291. So it's about, just to show on the chart, that it's around here. Actually, this is the today's low. This is the bullish bearish foundation point, and from that point I'm a bullish. What's happened in the moment, here, I watch the futures and I watch the British pound dollar in the same time, and I figured out that on futures, in the moment when we had an announcement, we touched the level 1.3. On the Forex, on the CFD, we touch, for various brokers, it's different, but around 1.2980. So I figure out that there is a high probability, if we have the bad results as we have for US dollar, to touch 1.3 level. So what's happened here? I just monitor the price, and in the moment when we have this kind of the biggest volume in the moment, and from the buyers and from the sellers, it was the price around, just to show, it was something 1.2945. So in that moment, past around 16, 17 minutes after the news, I enter into the trade, put my stop loss 1.291, and my target is 1.3. So my risk reward ratio is better than 1-to-1, and I think that it can be interesting trade. And I'm watching last minutes what's happened last half hour. As we can see right now, we have two bullish candles up. So the news are so bad for US dollar, and based on my previous experience watching the news and everything that happens, for example, the last time we have January 15, when we have the worse than expecting news for US dollar, and from then we have so many bullish days, and so push in the bullish side, and before that we had 2 days after that a bullish push. So all that facts, fundamentally and technically, I just decide to go bullish today, and I hope that to the end of the US session that we will reach 1.3. And my plan, if we don't reach this level, I will close my trade in profit. I will not wait to see the next day. So this is my trading plan for today. So nice. I wanted to ask the Sam, what do you think about, because you're more bigger expert related to the volume profiles and all these volume footprints. What do you think about volume and British pound dollar right now, based on your experience?
I'll be completely honest. I never look at the British pound dollar, so I haven't actually looked at it myself. But this indicator that you added, I'll be interested in having a closer look at it. I've never heard of it, never seen it before, so I'll be interested to see what kind of data it pulls, and what it's actually doing. But yeah, I mean, at the end of the day, I mean, like you said, there is always going to be a difference between the futures, obviously, and the CFD. Yeah. And sometimes there are many strategies about the difference, and you can take advantage of it. Sometimes they're very closely tied together and they move almost identically. Other times there is that kind of arbitrage going on, and there are ways you can exploit that. Whether some brokers allow it, I don't know. That's another question. But yeah, I mean, it is very interesting. I like that you're getting into the volume as well, because it can definitely open up a lot of, give you a clearer picture in many different ways as well. So it's really awesome. But I could look into the British pound today. I never really do, but I can look into it and see, see if the kind of
Will you
analysis lines
be
up.
looking at the 6B future side of things? Rather?
Yes.
Yeah,
I'm
exactly.
Now, yes.
Yeah,
Because there's more sense when you watch futures and the volume profiles than on the Forex. So I just went down.
Yeah, no, absolutely.
Data, right?
But that's really interesting. Really, really interesting. What I'll do is let me pop up my charts real quick because I'm very excited today that we've opened bullish, and it's been. I'm genuinely so excited. It's like the dark days are over. So let me just go ahead and share that. Bear with me, and it should be up any second. Add to stage. All right. Awesome. So I haven't actually cleared my chart since yesterday. It's still very messy. I did take a trade yesterday. I think we ended the session around here. Yeah, 2:45 my time. And then we had that retracement. Thankfully, that pullback went into that area of heavy volume. I started seeing people get trapped on the footprint, and I entered, but I didn't hold to my take profit, which was this level. I don't know if you remember yesterday, I said there's really only a few, there's only like one level left where I can see it could potentially bounce off of on the long term from, this little gap here. And thankfully, it looks like that one's actually held. The others just kind of like blew right through, because otherwise, the next one would be all the way down here and we're just going to continue for another week down, which wouldn't be ideal. But thankfully, that one held. So there's a bit of hope in the market. Hopefully it does continue to hold and keeps going up for a bit. But yeah, I think you're right. I'm going to have more of a bullish sentiment, but it really does depend on the footprint as well. I am going to have to clear a lot of these lines because this is just looking super messy. So I'll do that off the camera. Just because I don't want to delete everything, because some stuff is still relevant, but I want to delete a lot of stuff that's just really messy right now, and then restructure it. But yeah, I just wanted to show, I'm so happy. I'm like a kid at Christmas right now.
Well, let's see how the market reacts when the stock market opens, right? So
exactly. So we've got a few minutes. What I'm going to do, Richard, if you want to do your charts, that's absolutely fine. And in the background, I'm going to clear these up a bit.
Let me just get you out of the way. There's not too much to look at with the strategy side. I'll have a look a little bit in a later stage, but I did do a very simple. Let me just grab my chart here quickly. Where we go? There we go. Should be coming through now. Something happening?
Let's have a look.
Not yet.
Yeah,
there we go.
You're up.
I mean, this is just on the NASDAQ, on the CFD. Just this very, very plain simple channel, slope downwards in the direction of this obvious downtrend that we've been in, or still are in. And you can see this channel really contained price really, really well. This recent low that we've had undershot the channel a little bit. That's quite common with market geometry. But now with price actually making its way back up, it already cleared over the center line of the actual channel. I don't know if you can see that properly. And there's also been previous instances where that line's also acted as support and resistance. Pretty clear to see. So for me to become a bit more confident on the bullish side, I would like, and this is not just the NASDAQ, guys, like to see price clear this upper channel line, properly. Not like a little underthrow underneath here. If you do follow a little bit of market geometry or know where that is, quite often you will see there's a saying that as is below as above, or something like that. What that means is quite generally, and this works with pitchforks as well, if you get a area where price undershoots a line, whether it's a median line or up or lower channel line, and price overshoots that in the opposite or undershoots that in the opposite direction, then it tends to do that miraculously, I would say. Not all the time, but to a high degree, with the same sort of distance as the undershoot. In this case, if it would overshoot that, I wouldn't be in a clear until price actually clears this little channel to the top side, if that makes sense.
Yeah.
Now, currently, if we look at this, is just on a 1 hour time frame. Obviously, as long as that price would get lower and lower as time passes, obviously with the down slope in that trend, in the channel. So where price is currently right above it on the 1 hour, we're looking around about 19,830, give or take, which could potentially be resistance. So trading towards that, if I do get a setup on the lower time frame, that's something I will do. But I'll be very, very careful not opening a position too close going into it, if that makes sense, because it could act as very strong resistance.
Yeah.
So that's pretty much what I'm looking at on the NASDAQ. Let me just quickly share my other screen. Quickly want to look at the crude oil market quickly. Bear with me. I've got 3 big screens in front of me, so sometimes it's a bit difficult navigating all of them. All right. Is that showing? There we go.
Yeah.
Yeah, same strategy I've been trading during sessions on crude oil. There's actually quite a few nice reversals during that time frame yesterday, but you'll see that the market actually moved pretty fast. And this was yesterday when we had our session. That price actually tested those areas or those fair value gaps at quite a later stage, so didn't manage to take them. Also, nice little push up here on crude oil. So we've already cleared the yesterday's high, around about 66.84. We nearly just before the 9 a.m. mark had a reversal there, but price found support, and it's now obviously heading higher again. So if I were to be interested in a trade, I would like to see if price can potentially reach the 67.31 level. If it takes that out, potentially expect a liquidity sweep and see if we get a reversal, then that'll be a trade I'm interested in. Crude oil could also move very fast. One thing that I need to obviously keep in mind is any news that would affect crude oil, and we do at 10:30 a.m. Eastern have the crude oil inventories, which can be quite volatile for crude oil. So it might not do anything until then or slightly afterwards, potentially. See what happens. All right. That's really it, guys. We all know that as you can see from Sam's chart, that the ES actually gave a nice little spike to the upside. But although I'm in, or price is in my trading time window, I would really need to see. I mean, we did break this high from yesterday. Was this yesterday? Yeah. And if we do get over that again, I think that'll be quite bullish. But as I mentioned, didn't draw that channel on the ES now, but just on the NASDAQ very quickly before our session. So I'll also be watching the NASDAQ because that's one of my favorite markets to trade. Yeah. Make sure that if there is, for example, a setup, are we already 3 minutes into the open, aren't we? Yeah. We're trying to spike up. If I were to be interested in a long here, price will need to come down, take out these lows, and then give me a move back upwards. Otherwise, it might just be one strong continuation to the upside today. And we just looked at the NASDAQ. I just need to make an actual note on where that actual level is on my trading view chart, 19,829. I'm just going to drop that on. It's called 19,830-ish. I'm just going to drop that here on my trading platform. So yeah, very close to that level. Let's see if price can reach it and what happens if it does. In my opinion, might be strong resistance. That's pretty much it from my side.
Awesome.
I don't know if you guys are seeing anything there that might be setting up.
I don't see. Not yet. I'm hoping for a bit of a pullback, and then I would say I have a bullish position. But at this moment in time, nothing just yet. I am seeing a lot of sellers sell pressure coming in, but then they're not really making that much. I don't know. We'll see. We'll see. In fact, let me share the charts, and then I can actually show what I'm talking about. Yes. Share. Hopefully my chart is. Can we remove that at the stage?
There we go.
Cool. There we are. So yeah, really, what I am hoping would happen is there's really just two areas I'm quite interested in. This area and this area. If we get a pullback, ideally the lower one, that would be nice. I can see a continuation happening. Above, the only major area is this area here, this black box here. That would be where I would expect sellers to come in again. If go here, I expect some kind of pushback from the sellers in that area, but that's still quite far away. So I'm hoping there's a pullback so I actually have a trade.
So is that sort of like your void areas where you had like lowest sort of volume?
Yeah, kind of like fair value gaps almost, like kind of trapped volume.
Gotcha.
Sometimes I can draw it. I mean, I'm just using the volume profile, the daily volume profile. Sometimes it's easier to draw it actually on a leg, like this whole push down. And then I can see where the trap volume. So there's a bit of trap volume here, and it kind of overlays with the area we're in now. I would have to just if I get rid of that so you can see it a bit better. And yeah, this area, there's a massive drop off in volume right there. Right here is a huge drop off. So I can imagine that's where sellers are probably gonna jump in hard in the next area. But otherwise, I could extend it right to the top, see if there's anything more obvious. But yeah, there's nothing. And then otherwise you got really heavy volume here. So again, that would be the area where I'd expect a bit of activity to happen. But it will be quite a vicious area that. So it wouldn't be like a nice clean cut trade where, the moment it touches, it just shoots off. Unlike, what happened yesterday. Oh, what have I done? There we go. Somehow merged the two charts. Unlike yesterday where, these kind of gaps where it just shoots off in one direction, it wouldn't be like that. The point of control will be a lot more nasty. There'll be a lot more consolidation. It'll be very choppy. So more of a battle. But yeah, I'm really hoping for a pullback. That's kind of what I'm hoping for. Hopefully that does happen. That would be, we are starting to pull back a bit. So that's looking a bit more better. Let's see on the footprint what's actually, a huge amount of sellers coming in now. So that's looking actually quite good. These sellers. So I'm hoping that they have enough momentum to get it down to around here. And
look, I wouldn't be surprised. Sorry to interrupt. If they still just do another little shakeout below yesterday's lows, just to irritate everyone a little bit more,
Exactly. I mean, this could.
Yeah. Look, I'm talking as if they are doing it like some conspiracy, but you know what I mean.
No, but you're absolutely right. You're absolutely right.
Who knows? You have to trade. You have to trade if you get a setup and go with your plan, right?
Yeah, exactly. And if it does look like the sellers are just not getting out of these areas, or buyers are not defending them in any way, and it looks like we're going to get lower, then obviously the buyers will switch to kind of, and then an entry, back when it comes back for pullback on the other direction. So something will happen. One of them will happen eventually. I mean, it's just a waiting game. But yeah, we'll see. I mean, the buyers are absorbing quite well. They're really pushing that sell pressure, keeping it at bay, which I kind of don't want. I want it to go down a bit. I know I've been talking how much I want it to go up. Now I do actually want it to go down a bit. But yeah, hopefully. Well, I'll keep an eye on it. I've got alerts set anyway, so the moment it does go near those areas, I'll be pinged. So at this moment in time, I don't really have to watch it too much. The alerts have got me. So, but yeah, that's it for now. Hopefully in a session. If not, the next one. It's not a big deal. Igor, have you got anything you'd like to show, or?
Yes, I can show just what's happened right now, and one notice that I figure out. I will just show right now.
Absolutely.
Okay.
I will control that and to stage.
Yes.
All right, you're up.
Yes, we are here. Okay, so the two things. What I want just first, the trade is in a solid shape, nothing special, but I see that the market holds the previous price before the news. So the market really holding, and there is, I think, more buyers than sellers right now. And I think that we will reach 1.3 based on the of the market structure right now that we have. So what I want to share with you, it's some my thoughts that I just started to test last 2 days. What I have on the screen is an indicator that's going VWAP. I know that majority of traders use this indicator, especially people that trade stocks and equities. And just for the watchers right now that watch this right now, this live session, just to tell that VWAP means volume weighted average price, and it's a technical analysis indicator to access the average price of the security. The formula is very simple. You just multiply the price and volume, and then you divide with a summary volume. It's not about the formula there, but the good thing is that a lot of prop companies, a lot of traders that trade equities use these for intraday trading, because this indicator, as you can see, use a session, so one daily session, and the same line that you see is on the same price levels, even you watch on 50 minutes, 30 minutes, 1 hour, whatever we do. And the basic strategy in trading when they trade equities is, if the price is above the VWAP, we have the bullish sentiment, and if it is below VWAP, bearish sentiment. And it's very simple in that way. However, what I noticed is that the moment when we are going from bullish to bearish and from bearish to bullish, align with my strategy when I draw the trend lines on the 30-minute chart. And it's a little bit, I need to say, strange, but see how right now we are moving from the bullish to the bearish, for example. And I tested this for last 1 year, and I can tell you that in 95% of the cases, my trend lines on 30 minutes relative strength index align with VWAP. So I know it's nothing special there, but I will see maybe in future to use more VWAP, especially to put it on the futures and the use in trading, because I know that that levels are not perfect. I have better levels than on VWAP levels, but the catch there when I watch, for example, like this, is if I want to buy, I can always wait the price to touch VWAP or go below the VWAP, and then to go into trade, to be more patient in that way. And I think that VWAP can be maybe the indicator that I will use in the future more than ever. However, of course, I need to do some calculations and a lot of things, but I just wanted to share my thoughts that I have last 24 hours related to this. And of course, to ask you, what do you think about VWAP?
Yeah, I mean, VWAP is I know a lot of people use it. I've personally never really used it. But especially in the futures, a lot of people actually use it. So I've never integrated it, to be honest. But I might actually start looking at it more, because it is constantly spoken about. VWAP. I've just never got around to actually,
It's also Sorry, Sam, you talk.
Yeah. No. Yeah, that's pretty much all I have to say about it. Like, I mean,
Yeah,
it's a better version of a moving average, right? Because it's volume weighted, so
Yes.
it gives you a bit more clarity. So absolutely, in terms of like moving support and resistance, I can see how as well that can be very useful. But yeah, sorry, Richard.
yeah, no worries. Yeah, with the VWAP, what you can also do there is actually add 1 and 2 standard deviations above the actual VWAP. And quite often, just almost like Bollinger Bands, if they are on the second or the third percentile, you quite often get reversals from those levels, or they act as support and resistance. And that's typically how we tend to use it. I know one of my mentors back in the days were telling me that actually the traders that were on the floor were sort of judged by how close or near they buy or sell according to what the VWAP's telling them on the equity side of things. So, if they have to, like, at the end of the day, whether you make profits or losses, he'll be asked by your boss, where did you enter? Because back then, that you didn't see just like, like with the computer software and stuff that we have here, but they could do calculations on a very simple computer. They were actually judged by the performance by how close they bought or sold near to the actual VWAP. So yeah, there's definitely a time and place.
Tip. I will try to do that. I will try to do that. And I will just share one expert advisor that I tested related to the VWAP. Maybe the listeners will be interesting too. What I try to do is I took British pound dollar, and I put, I know that a little bit it's crazy and funny, but I will try to explain what I did. So what I do, I put that my entry is each 25 pips distance. For example, 1.2925, 1.2050, and et cetera. And I create expert advisor to buy and close each 25 pips. I know it's not good strategy. It's of course stupid strategy. But what I did, I ask based on features to pick one indicator. They can help me just to make that classification model to be at least 50% accuracy or maybe more. So to find one feature to change that. And what's happened, it choose VWAP. So whenever price is below the VWAP, it buys. If it's above, to sell. And in that case, I'm getting more than 50%, 51, 52% of accuracy.
Okay.
And I know it's not for trading. It's not a trading advice or strategy. It's not good strategy at all. But I figure out that VWAP, even on the Forex pairs or any other asset, can be really used as some kind of indicator. And it's very good when price, if we are bullish, just touch the VWAP and be near there and start again up there. So I think that there is a potential of using VWAP in expert advisors and in manual trading too. So I will try to investigate that. Yes.
Awesome.
Interesting.
Oh, really cool. Really interesting. Oh, alert just went off in my ear. Let me jump on.
Right.
Okay, so we just reached that area. All right, let me get the chart up.
Sharing.
So that's on a pullback now, right?
Yeah, so we're having a pullback. Let me go back. Right. So yeah, we hit the first level. I wasn't really too interested in that one because it's a bit too close. It had a little bit of a reaction, kind of, pushed up a little bit, but am I seeing anything interesting? What I would like to see are the sellers exiting, taking profit at some point, getting out the market. So it doesn't really work this way, but it's something I do in my mind. So I kind of just count up the big numbers, right? So like 1.71. So I kind of do 2, 3, 4, 5, 6, 7, 8. So I know roughly there's about 8,000-9,000 contracts, right? in this little push down, you know. I kind of ignore the smaller ones, but I think like 9,000-10,000 contracts roughly. So if I start seeing similar numbers on the buy side lower down exiting, then I know these sellers are all getting out the market. And when it kind of roughly aligns the same kind of, you know, 8,000-9,000, then I know that's kind of reset it almost the market, if that makes sense, right? The pressure is kind of being reset. And then I know any additional aggression coming in is going to have a much more of an impact in moving the market. And then I can gauge what, essentially, you know, what might happen next. But these sellers look like they're still very much in the market, so I'm not looking to buy at this moment in time. I would like to see them actually leave the market, because the chances are, if it does retrace a little bit, they're just going to defend this area very well and continue pushing it down. So there could be a short position as well, potentially. It's not my favorite setup. I don't like, I don't like relying on people defending an area. I like relying more on people being forced to leave the market rather than being not forced to enter, right? Because it's more of a immediate response. If you're forced to leave the market, you're going to do it a lot quicker and more urgently than if you're never forced to enter at the same time. Do you see what I mean? So kind of relying on people entering is just not as good as relying on people having to get out. So but that could be another potential trade.
Just quickly on your chart, if you just zoom out a little bit, lower down, do you have something there?
Oh, you mean on the candle?
No, your zones actually. Those zones that you have there.
Yeah.
Do you, on your ES chart, do you have something around about 5565, 5570?
Is that the futures price or the CFD price for? Because they differ. Sadly.
Yeah, I mean, are you on a continuous contract there? So it should be very close.
Yeah. What was it? 5.5.
Yeah, so it's basically yesterday or today's low, and yesterday's sort of like high low.
Oh, okay, so today's low would be down here, 577 roughly around here.
Yeah.
That's the point of control from yesterday. Actually.
Gotcha.
Yeah.
Yeah.
So the point of control from yesterday is pretty much the low of today.
See, for me to go long, price will have to go all the way down there, and I don't know if it will have the legs, but who knows?
I mean, it could very well. I mean, I've seen it. I mean, look, we kind of saw that yesterday, right?
Yeah.
Like it went all the way down and it reversed all the way back up, pretty much reaching the high. Almost.
Yeah, that was like in less than an hour, or just in an hour's time.
Yeah.
1, 2, 3.
It was
a little bit over an hour. Crazy jump up.
It was. So anything's possible. I mean, especially recently, it's been very.
Or we just go sideways and do the same thing for ages.
Yeah. But if I zoom back in, am I seeing any sellers leave? They're not leaving the market. They're adding to their position, actually, right there. So literally what I just said a minute ago, they did end up defending. It got close to their entry, essentially, and they're jumping in again hard. So maybe they'll leave soon, hopefully. I mean, but yeah, I'll have to. They have to leave the market before I consider buying, because it's a lot of volume. I mean, especially on this level. I don't know who these people are, but I don't want to mess with them. They have a lot of money. Let's just put
me on the side of kicking
buttons.
Yes.
So yeah, I don't want to be against them.
Yes.
But yeah, I'll keep an eye on it on in the background. But apart from that, there's not much at the moment. It's looking like they're not giving up yet. They want to push it down. I think they've got their eyes on some big money. They're probably looking, to getting out at least today's low, or maybe even yesterday's low. They're looking to push that market right down. But will they be successful? Who knows? We will find out. So yeah, maybe it might not be a bullish day. It might be bearish, and this was just one big tease, essentially. But who knows? Who knows? We'll see. So yeah, I'll keep my eye on it and check back if any developments happen. But as of yet, I see no buying opportunity. I could join the sellers, but that would be dangerous to already join at this point. Because truth be told, your stops would have to go above here, and that would be very dangerous.
Be far away.
Yeah, I wouldn't be comfortable. But cool. All right. What can we do? I could show the recording of yesterday's trade.
Oh, did you record that?
If you want. Yeah, I recorded it just after I jumped in. I managed to screen record it, so I could show that for the viewers.
Evidence.
I'm sad Robert is not in the chat today. We usually get a viewer called Robert, and he always leaves great comments. Robert, if you are in the chat, please make yourself known. This is the first time I haven't seen exactly. I haven't seen Robert in the chat for the first time in a long time. So who knows? Maybe he's busy. We can't expect everyone to always be here every day. But yeah. Oh, he is here. He goes, look, there he is, Robert. He goes, I'm here. I'm going to add that to the screen. There we go. Robert's there. It's great to see you, Robert. You were unusually quiet today. So yeah. But all right, I'll share the screen to the yesterday's trade because it was a very nice setup. Oh yeah, those sellers are pushing it down. Right. So they're very aggressive. Okay. At one point they will get out. When that is when they are finally satisfied with their profit. So let's remove that. Now, I don't know if this will actually work. Because it's a video. We'll see. If I do share screen. Yeah, no, I can't do that. That's a shame. Maybe I can share video. Sorry, bear with me, guys, while I figure this out. I should probably have done this before we went live to actually check if it's possible. But I can just do entire screen, right? Or window. Yeah, I can do that, and then just because I bought this graphics pad, and I thought it would be really cool to kind of annotate on it. So I kind of want to, test it out. All right, if I hit share here, this should work. And it's just frozen, so that's not good. Okay, I've ran into technical difficulties. My computer is completely frozen. I don't think your browser has blocked your screen. Oh, well, that's not good. Why would it block
the Timo pad?
That's it. It's just the technology is not working for me. No, unfortunately, I can't do it. Every time I try and share, it just freezes, and I get a weird message saying, I don't know, my browser's blocking it or something. So, all right, that didn't work out. Sorry. I'll figure it out another time. I went and watched Mikey 17 last night and didn't get home until 1:17, so I'm struggling. Oh, Robert, you're going to get those early nights, but it's good to enjoy yourself once in a while. So, absolutely. If there's anything on your guys' screens, feel free to take over with the screen share.
I'll just go do a quick share on my side, if I may.
Absolutely. Okay. Please do.
Please.
I've added you to the... Yep.
Here we go.
Cool.
So here on the ES, that's that zone that I was asking Sam about. Basically just yesterday's low. We got these higher lows over here from the day prior. So for me to try to go long, it'd be interesting to see if price does reach that, how it actually reacts there. Now, if you look left here, and this is on the ES, we've got a fair value gap right here as well. Quite a big one. Slightly lower down, right? But it's a bit more evident here on the NASDAQ. is that fair value gap here. Let me just zoom into that a little bit. A pretty large one. It's been tested once, twice, and with price now moving lower, it's still far away. It's not necessarily going to get there, but that would be the area I'll be interested in getting long. If price can reach it, tag it, and give me my reversal signals, then so be it. Then I'll be willing to long this market or go long, but a bit far off still. Close on the ears, though, I must say. But yeah, looks like a pretty strong move downwards again here on the indices. So hopefully we can see price reach that, and according to how it reacts, if it does, I'll have to plan accordingly, and hopefully we can get a trade going here.
Yeah, hopefully.
Crude oil's been a little bit volatile since printing new highs for today. But we also have crude oil inventories in half an hour's time. And if you've ever traded crude oil, that's, can be like the CPI data for the indices. Can be quite volatile for crude oil. So I'm looking at this level around about 67.31, not far off it. That's actually the high from 2 days ago. So that was on Monday. Let's see if price can tag that to the upside and then reverse within my trade window, then that is what I'll be looking at on crude oil for an opportunity to go short potentially. But yeah, price still a bit far off these areas that I'm interested in. So yeah, that's all I really got. So we'll just have to be a bit more patient, and hopefully price will reach it sooner rather than later.
Yeah.
Igor?
Absolutely.
Okay, I can share you right now to see the US dollar currency. Just we didn't analyze that, and it's a little bit strange. But I think, as you can see, in the moment when we had a CPA news, that hour is closed as a bullish engulfing candle. So it's a little bit strange. However, based on the news and based on the market reaction, like I said, I still see here that we can go a little bit down and that we can reach the target that I'm talking about at 1.3. But the thing that I'm watching right now on the currency, on the US currency, is that I think that we don't have enough push to downside here. So we can see maybe some kind of consolidation in the next days. And I think that potential for Eurodollar and British pound to go up is limited. And it's just about of the shape. I drew the trend line on 1 hour chart. We are just starting some bullish divergence. Maybe this is some consolidation that can be a few days, maybe 1 week. I don't know.
Yeah.
And it's normal after this huge sell-off that we had. It's normal to have this kind of consolidation period. And I think that the last hour, it was bearish hour, and we started another bearish move. We will see will we go down there, but I hope that we can see at least to reach my target, because I like to win.
Of course.
And then we will see. Then we will see what will happen. Like I said, my bullish bearish recommendation point for British pound dollar is 1.291, and for euro dollar is 1.083. So this is some levels that I'm watching when I will close my trades if I see, for example, that price is going to go down. But I think that this was just some false market move. I think that a lot of people are surprised because of this reaction, but I think that we will continue today, maybe reach a little bit high, and then tomorrow to start to go down and consolidate price or something like that. So I see the US dollar index in the phase of consolidation. So this is the nowhere zone for me.
Yeah.
So neither bullish, neither bearish. I think that it's strange for me that it was a bullish engulfing candle after this news. So this is something strange for me. I didn't see that for a while, but I think that it's just a market reaction. I think when I see some news and what traders wanted there, I think that everybody expected a little bit better news for US dollar because of all these tariffs, increase of the commodities. And I think that people think that we get a little bit good results. We can make a huge pullback and then continuation for bullish trend for euro dollar, British pound dollar. I think that people waited for that. And I think that this bad news is some kind of surprise for everyone. And
Yeah, but don't you think, Igor,
was
it's a little bit too early to, sort of really see the effects of those things, like the tariff hikes and those things in the actual price data or in the numbers that come out? I've read somewhere we're only going to really start seeing the effect of this run about, what's it, about the June CPI run about there.
Yes.
But I mean,
Yes,
I don't
think
know. I'm just not really big into trading the dollar. Well, the forex side of things, but yeah, it's just one of those cases where you expect the market to do one thing and then it does completely the other. The opposite.
yes. Fundamentals are really crazy. I can show one my story if I'm not boring about that. If you want to
No,
hear
Please,
about
no, I
please.
love this
fundamentals,
stuff.
so okay, I will just try to to tell the story. Maybe the listeners right now, maybe it will be interesting for them. So I had one big trade. It was I think here around 2011, something like that. It was after the big crash for US dollar, for a
Hmm.
US economy. And what's happened then, fundamentally, the problem was that we had the China, the biggest production country in the world, and on the other side, Aussie CAD, Kiwi, all that commodity currencies, they are very correlated with China economy, because if China economy started to go down, they as exporters will start to lose money, and that's happened. So first the problem was in America, then in Europe, then a little bit China started to slow down, and I wanted fundamentally to use that, and I started to watch reports, fundamentally reports for New Zealand dollar, actually for New Zealand economy. And believe or not, several months, every single big announcement, all that news were bad for Kiwi. So bad that you cannot imagine how bad. I can find that report. It was disaster. It was disaster, and I wanted to sell. I remember I was around level 0.86, if I remember, near to 0.9 level, if I remember that. It was really 15 years ago. So in that moment, I see everything good on chart. I see sell off. I see a bearish candle on daily chart. I have that data and start selling. And in the moment when I start to sell, price started to go up, and make a new high. And I lose the trade. Then I wait a few days and I do the same thing and the same thing. And I'm losing account. And I was so angry at myself. And I was a little bit crazy those days, because the news was so bad. Everything was bad. I watch all things that I can watch, and price is going up and up and up. And in one moment, I think it's a 0.94, price started to go down up to 0.6, 660 and something. It was a more than 35% down. So all that fundamentals are really true. All that, but there's so huge delay. There's so huge delay which we need to wait. And then what's happened a couple years after that, there was a movie, Big Short. Maybe you watched that.
Yeah.
Brad Pitt and Fame. I watched that movie. The same thing. That guys that made all their trades, they made winning trades. But what
they
happened,
really had to be patient.
they waited 6 or 8 months after that really to see the price going down. Even though everything was clear. So I learned from them the same thing that you just said. We need to be patient sometimes with the fundamentals. Sometimes we need to wait months, not weeks, months, to see the reaction, the real reaction. And you are completely right, Richard, about that.
Yeah, no, 100%. I've seen that so many times. You know, you are actually right about things and which direction markets would eventually go quite often, but not as quickly as you normally would want to, you know.
Yes.
So yeah, it's definitely an interesting phenomenon that. But yeah, I still think it's going to be 2, 3, 4 months from now before I'm actually still very bullish on the indices, to be honest. I think we might actually this year still make new highs, but I don't think it will extend much further above the new highs for this year. So again, I might be wrong. Trade what you see on the chart, but I think then we're in for a big one to the downside. So,
sorry, let me switch to your chart, Richard, because it's still Igor's chart.
Yeah, I didn't actually show that. I was just talking.
Oh, okay, my bad. I thought you were explaining something. Sorry.
To get a real long
either way,
chart
your charts are up
I
now.
can pick one up for you. What you guys talk.
No worries. No worries.
Get an ES chart going and see if I can explain what I'm looking at.
So nothing's happening really on my end. Sellers are still very much in the market. A few dropped off, but nothing major. They're still, the majority of the volume is still all on the sell side. So they're not letting go. So until they do let go, there's nothing there on my end. Shall I have a look at the Great British Pound?
Yeah, please.
Yeah.
Sorry, I'm going to be drawing a little bit. I'll show you a little bit later on the market geometry side what I'm looking at. Okay.
Okay. All right. I'll switch over to. Okay, I should be up now. All right, cool. We just got a comment. Robert says, Sam, on the volume footprint, I have the imbalance setting set and curious if you use that much. I personally, I switched it off just because, not because it's not useful in any way. It's more just, I found myself relying too much on it. It almost makes it too easy, right? Like you see a little imbalance and then you're like, oh, okay, there, you know, and you just follow the imbalance basically, and you're not actually trying to figure out the story so to speak. So I switched it off because it actually made me a worse or more lazy as a trader, right? I mean, you can kind of see just with the delta, you can kind of know where there's an imbalance, right? Like, because the imbalance, even if it's low volume, and say there's, you know, 10 contracts traded on the sell side and 40 traded on the buy side, it'll still show as an imbalance, but that doesn't really matter. It's so little volume, right? So I only want to look at the higher volume areas, and a delta kind of is imbalanced, right? If there's over 1,000 contracts more on one side, that to me is, even if it's not the right ratio of imbalance, still, to me, that's just a lot of money, right? That's just a huge amount of contracts for one side to have extra. So I tend to not really look at it that much. I tend to look more just at the literal volume. If it's big enough, and the delta, that's pretty much it. And then I base my decisions on that. Okay, let's jump to the pound. Sorry, this is still the S&P 6B. Here we go, pound. Right, I've got to actually zoom out a bit because I haven't done anything to these charts before. I have no idea. Okay, all right, very interesting. We've got a nice all right, so the first thing I would do, just to get a kind of a rough idea where we are, I would use the volume profile tool for this whole stretch down, and I will try and figure out where there were any gaps, where's the point of control. So we broke above the point of control a few days ago, back like 10 days ago or so. Got a gap in volume here, which it blew right through. Yeah, so it blew right through, came back, retested it, and continued off it. So that's, to me, again, a bullish signal. Went through, came back, and now we're pushing up again. So yeah, I would have definitely more of a long-term bullish bias than on the pound. The next area where I would be worried about if I was in a long-term kind of bullish trade would be that area. I would expect some rejection there. Whether it's a big rejection, smaller rejection, it's hard to know until it gets there, but something will definitely happen around that area. And then, yeah, I would zoom now down. So now I know roughly where we are in the long term. I'll zoom down to the 15-minute and look at, the more immediate, what we're looking at today, yesterday, stuff like that. And so we got that kind of little drop off of volume right here, which it already reacted to back, early this morning, UK time. So it already jumped off it, and we had the news that came out. The news, I'm going to kind of not look at the wicks because, it doesn't really respect anything a lot of the times, the news, right? Like, so just ignore the wick of the news candle. And I would say the area, yeah, there's a gap in volume right here, which it's kind of, respected, so to speak. And we're kind of trapped between those two areas. It might be more of a range starting now between these two areas, basically. So it could be more of a ranging market, but I wouldn't be looking to buy until we drop down to kind of, the low of the day, really. If it breaks the low of the day, then I'll be looking at, this kind of area here. That will be my next area where I'd be interested in buying the pound then, if it does break below the low of the day. And then there's another one, I would say, like a few days ago here as well. That's kind of a bit of a gap. But yeah, that's what I would be looking at. But at this moment in time, again, we're just in the middle, basically. It might not do much. It will have to go to one of these areas before I would even consider anything on the pound. In terms of the volume footprint, see, this looks so weird to me because the numbers are so small in comparison to the S&P 500.
Yeah, not in the thousands.
I don't know what big is. I would have to kind of like get an average going and then look, and then I can kind of figure out, all right, anything over 200 would be like very big on the pound. But yeah, I would say pretty much anything around the 200 mark looks quite big on the pound, to be fair. Otherwise, you got relatively small numbers. Yeah. So, yeah, but was there anyone trapped? Let's have a look. That was news, obviously. Yeah, here we go. Here are these little buyers getting trapped right there. 257 contracts. They tried to buy another 100 there. Buyers getting trapped around that area. And then I'm assuming they dropped off as we pushed down, starting to get bigger numbers on the sell side. They're getting out. It kind of went sideways a bit, tried it again, and just failed and kind of plummeted down. But you see, like, because the numbers aren't that big of a range, I don't like it as much. I like the S&P 500 because it can really range from really small numbers to huge numbers, and it just makes it more clearer when you're looking at it. But yeah, the same concept 100% applies as well to pretty much all the what do you call it? So here's quite interesting. Right before the news came out, you saw this huge sell right here, and that's 100 million%. That is these buyers getting out before the news is coming out. Someone, getting out before the high volatile news. So, yeah, everything is just a story. You got to look at it within context, and then you can kind of figure out what the big players are doing. But it's like learning a new language almost. But yeah, pretty interesting.
But for me, it's beautiful how you just use a completely different strategy, and you have the same levels that I got. So it's very interesting how different strategies just can point to the same dot.
Oh, absolutely. I said this to James, I think it was. I was in a session, and we literally had the exact same levels, and I was like, it's amazing. Do you know what I mean? Like we interpret it. We're using different methods of interpretation, but we're coming to the same conclusion. And that, it just goes to show it's not about so much about strategy. It's then comes down to discipline. Like any strategy can be. I mean, not any one, obviously. I mean, there's got to be some reasoning and logic behind it, right? But like any proven strategy can work. It's just down to the person and how you execute it.
Yes, but one interesting thing, you just show, for example, level 1.32, for example, for the British pound dollar, and it's institutional level, I think, from the 1985. That level repeats itself, and it's so strong level, and you just figure out in a 10 seconds, just using the volume profiles. It's really beautiful. It's really beautiful.
Yeah, I mean. Yeah, without the volume profile tool, I wouldn't know how to trade. I'll be honest. Like I have a lot of respect for traders who use like price action, like market structure, because I can't do it. Like I'm sure if I tried hard enough, I could eventually learn. But for me, it's very difficult. Like, but again, it comes down to the personality, right? Like some people are just very good at just spotting it and seeing the levels by eye. I just haven't trained my eye to see that.
Whatever works for you.
It's amazing. Exactly.
Yes.
But yeah, without the volume, I would be useless. I really hope it doesn't become, I don't know, restricted or something at one point, because restrictions, like you never know. I mean, I doubt it, but what if one day, you have to be a verified professional or something. You can't be a retail trader to get access to this data. I would be screwed. I would cry, but luckily hopefully that doesn't happen. I doubt it will. No. But
can I just quickly show you my long range chart here on the SPX?
Yeah, please.
Yes,
absolutely. At the stage. Okay, you're up.
So yeah, that's kind of what I've been thinking here, just from an Elliott wave perspective, or phase, as I rather call them. And look, yesterday I showed you that sort of long range forecast from that guy from NeoWave. Kind of thinking that this decline that we're seeing here, is not, that massive, but very volatile. If we take measured moves here, which I'll show you in just a little bit, then price already reached those measured moves. Obviously, we haven't seen anything like this that we've seen here from December 21st till, that lasted until October 22nd. So we also just have to have some perspective, right? Generally speaking, but before I get to this decline over here, but I'm counting this obviously very strong bullish move up here as a completion of a third wave that we've had recently, with this just being corrective in nature with a potential another move to the upside to complete this entire cycle. And it would only be once price breaks these highs that I'm really going to start getting nervous for potential much more deeper downside, if that makes sense.
Yeah.
We have a clear, for my case here, a one. I put the 2 here because I think we got a running flat ABC over here. Yeah. And then on this side over here, you can count the internal waves of this third wave as something like that. All right. Again, I didn't really care about being too perfect about the counts. If you follow Elliott wave analysis, you can put two different guys in a room, they'll come out different type of analysis. But you're probably going to have Fibonacci ratios at these levels where you typically get your impulse waves, where they extend to, and so forth. But I think this is a fourth wave correction. I might even be thinking at the moment that what we're seeing here, if we get a very strong move to the upside that just keeps on going for like weeks at end without any sort of smaller pullbacks to the downside, so I'm talking about a very strong bounce, then I'm actually going to consider that this was actually the end of that third wave, with this being what we call an expanded flat correction. Let me just get my wave tool out. Can you guys remember where that is? I don't really use. There we go. This is an actual correction. And the reason why I'm saying that is generally when speaking, let's say like this fifth wave over here, this looks like an ending diagonal. I don't know if I'm talking above a lot of the listeners' heads here, but this just doesn't look like a 5-wave completion to a new high. Does it make sense? Before we see this strong decline to the downside again. Also, the fact that it just broke above that previous high, and I've actually made a few videos, I think, on our YouTube channel about this, is a typical reaction of a expanded flat, a very volatile type of correction that typically also occur during volatile times. So let's say this area over here, that's what I'm thinking, could also explain what this is. If this is that explanation, then we need to start seeing a very strong move back upwards very soon. But let's say this high over here could potentially be that third. We then have a corrective structure. Let me just get my tool out again. That runs in 3 waves. Then we have 1, 2, 3. And you see, this is what I mean. I just can't count a nice 5-wave structure into that high.
Yeah.
You see what I mean?
Yeah.
It looks like one wave up, you get a nice little ABC, and then one more up. And typically with expanded flats, in this case, this will be an A wave. I'll mark that up now. This is a B wave. It typically ends or extends slightly above the beginning of the correction. And then you get one hell of a sell-off that moves really fast, very volatile. And they typically also end in V-shaped bottoms, where you get a strong reaction back to the upside again. So that could potentially also be explaining what is happening here. If you wanted to go label that, let's say that move over there could then be that A B, and a very strong C. Where your C wave is typically very violent. It also quite often reaches your 161.8 extensions. They are longer than your A wave in most cases, and thus far, just looking at the actual, let me just get that tool out. Where is it gone now? Sorry, guys.
It's all right.
If you look from that move to the downside, and if this was that A wave and that B wave, then we've just extended past the 161.8, 178.6. This is typically where support steps in. I mean, it could still go to the 200%, which is not really a fib ratio, but that's typically how these C waves of expanded flats react very, very violently. So now if this was a third wave, that could also potentially be the end of that fourth wave. And yeah, very interesting. I think on the fib, before I give it back to you guys, from a retracement side point of view, if this was a 1, 2, and a 3, then I don't know if this is actually going to show anything for us. Hang on 1 second. Then your fourth waves typically also extend towards a 38.2% retracement from your second to your third wave measured, which is still more to the downside. So very interesting to see if this pattern that I'm thinking might be expanded flat actually is what we're looking at, then we'll probably have a little bit more downside potential. But just as far as we've seen that move to the downside, we might very, very fast you see him move back to the upside again.
Yeah.
Again, it's all about, trying to formulate an expectation, what you might be dealing with. If it does follow that expectation, you have sort of a plan that you might want to execute. Now, if things don't go that way, then you can't be hard-assed about it. As a trader, you need to accept the fact that you're wrong quite often, and then, look at what else could be a scenario. Might be wrong about this move to the upside here, and that potentially was the third wave, and now we're still going lower in just a very large, extended move lower. That could be an A, B, C, something like this. Takes a lot of time because quite often your fourth waves, if it's not an expanded flat, they take typically quite long to sort themselves out. So I mean, like period wise. So it could be something that could go on for months, maybe till the end of the year, in my opinion. But that's what I'm looking at. That's what I'm feeling. The gist of the whole thing is that I still see this as corrective, not the end of the world. So everyone's nervous and all that sort of stuff. But personally, I'm just treating this as just a very volatile downwards correction with more upside to follow.
Yes.
I agree as well. I don't think it's the end. I don't think it's going to just drop down and wipe off,
No.
trillions and trillions. Like, no, I mean, it can do, but
yeah.
At this moment in time, you're right. It's still more in just a corrective phase. It's not doom and gloom just yet.
Look, we've got so far to go to actually, really get in the bear market territory, I would say. I tend not to really listen to the big talking heads too much, because they'll tell you stuff after the fact, you know what I mean? And as if they know what they were talking about, sort of things. It's like try not to, a lot of these news sort of stations and that sort of stuff just tend to talk a lot of BS, in my opinion. Get everyone worked up. It's like news driven, it's like stoking fear and that sort of stuff. When if you look at measured moves, for example, look at just this decline that we've had last year. From when was this? July to August. What, 1 month?
Yeah.
We had 100% over there right now. It's just like, this is sort of, I wouldn't say normal, but it's to be expected at some stage, right?
Yeah, it happens every so
often.
often.
Very strong bullish move to the upside. I mean, something's got to come down at some stage, but
exactly,
it's not the end of the world. That's what I'm really just trying to get across for. Obviously, you guys know this, or maybe you disagree, but maybe to our viewers out there listening, it's typical market behavior.
Yeah, especially on something like the S&P 500. It happens, once a year or so. Like you are going to get that kind of that dip, so to speak. That's buying the dip, right? I'm not suggesting you should just randomly buy, but just
look, it's, especially if that is a C wave of an expanded flat, it's extremely difficult to try to figure out where they end. They typically end at those very far extensions on the flip side of things, or even 200%. Sometimes if they're really, really strong, they go to 238.2, over the 200 extensions. But and just as fast as they started, they just out of the blue end abruptly and reverse and go back upwards again. So if you see that behavior, then you can sort of like, plan a little bit ahead, like maybe, that was what was happening and that we might have the bottom in place and that, your bias might be should change to the upside. But, that's just me. That's how I think about things. I've done a lot of studying into corrective patterns and especially the behaviors that they tend to show, you know what I mean? So, and they all quite often have like certain characteristics or behaviors I've just said there, especially with your expanded flats with that B wave coming up that just pips the previous high or low, depending what direction the market's moving, and then you get the sharp sell-off or sharp bounce or whatever to the upside, which is what we've been seeing. So could very well be.
Yes. We have a few questions that came in. Rachel Carter says, what role does liquidity play in trading, and how can I use it to my advantage? I guess liquidity, liquidity you can see without having to look at volume, really. I mean, anywhere where people would place their stops, take profit, stuff like that, that would be liquidity. And you can kind of just figure out, are a lot of people getting out the market at this area? Will people be taking profit? Are there going to be lots of stop losses there? And if you can figure that out, you can kind of formulate a picture, of what might happen next, right? It's never going to be 100%, but you can formulate what might happen. If a lot of people are exiting the market at this level, there could be a possibility it'll slow down and maybe a small reversal, and you can take advantage of that. So that's essentially why liquidity is important, right? It helps you figure out what the next move could be. If any of you want to add anything to that,
Yes, about liquidity, there's no problem about that. Just to add, I saw another question about multiple position and risk. Am I true?
Yes. Rachel again asked another question a bit after. Because how can I manage risk when trading multiple positions? Anyone wants to answer? Go for it.
Yes, I wanted to give just one little advice. This is very important when we have multiple positions. It is very important to check the correlation of that assets. For example, so every single position that you have, it's very important to check correlation. For example, if you have euro dollar and British pound dollar in the same time, you will be in the same direction. It's a high risk. It can be problematic. However, if you choose two completely different things without any correlation, it's totally different. You can just watch that two positions as separate positions. Is there no risk? So you need to calculate that. There are a lot of online tools for that, but the most important thing is to determine your correlation level, and it's important to see when you open that positions, which time frame did you use, and you need to determine which kind of trader you are. For example, I trade 30 minutes, 1 hour, so I will use 1 hour correlation when I need to make decision. If you trade a swing trades, you will use daily correlation to check what is on the daily level correlation between that assets. So this is just one tip that I can give related about risk management.
Yeah, on my side, for example, if I know, for example, I might be opening, let's say, 3 positions, one in crude oil, one in NASDAQ, let's say 2 markets, non-correlated, then knowing that, it's obviously I've been planning that beforehand, then I would obviously try to not let my risk be still on both positions together, not more than a certain amount of what I'm comfortable risking. Let's say 2% or whatever the case might be. Right. So I think they always say don't take like 1%, 2% or whatever you want to risk, whatever your risk profile is or tolerance is per trade. But I find it very important. You can't just go and open 3, 4 multiple positions, especially if you're a beginner trader, and risk 1% per trade or per market that you're trading. So if there's multiple positions, I would, for example, reduce a lot size if I know I'm going to potentially take a crude oil trade and a NASDAQ trade, so that the total combined risk overall is 1 or 2% of my account. So that's also very important to understand that, in my opinion, that is.
Yeah, I agree 100%. Both points there. Personally, I would say multiple positions if you can avoid it. Like trading multiple different assets at once. If you can avoid it, it's probably best you do. Just because it's better to focus on just one. Because you kind of learn how that one moves. Whatever asset it is, whatever instrument it is, you kind of become familiar with it. And then if you try to use the same strategy on another, I'm not saying it wouldn't work, but it takes a bit of a process. Like when I just looked at the pound, like it looked weird to me because the numbers were different. You know what I mean? I just wouldn't be able to trade it as effectively as something I am used to seeing every single day.
Or not comfortable at all.
Yes. Yeah, exactly. And you just kind of get to learn how that asset moves. So if you can kind of choose one you like. I mean, how you find out whether you like it or not, it's just trial and error, I guess. And stick with it and really just get to know it, you know. Become an expert in one instrument. Is definitely, you know, put your time into one. And yeah, sure, there will be days where it'll be boring and it's not going to be as exciting. And, you know, you might be tempted to go into a different, I don't know, trade gold or something a bit more, you know, lively. But just remember, you're upping your risk when you're doing that, because you're just not going to be as used to it, you know. So, and also if you're opening different assets, like they move differently, you know, you definitely need something like the ATR to kind of figure out how many pips does this generally move, right? Because if you're opening, you know, one lot on gold, but then you know, you're opening one lot also on like the pound, like one lot on gold is going to be way more. You know, you'll be surprised at how much more it moves, for example. So bear in mind that different assets move you know, at different rates, so to speak. So you have to kind of adjust your lot size constantly if you're trading different assets. But apart from that, yeah. Any other questions? What has Robert said? Sorry, I didn't catch. So it's about the imbalance. That makes sense. I find right settings, it works, and changing the time frames. Yeah, I agree, Robert. He goes, but volume is key. It tells you more about what institutional traders are doing. At least that's what volume traders say. Yeah, I mean, volume traders always going to, like myself, always going to brag about the volume. I mean, that's just natural. But there are other ways you can interpret volume. You know, like I've always said, it depends on who you are. Like some people are just good at seeing it by eye. Others like the raw data. And there is no right or wrong. At the end of the day, the results is what matter. If you get better results trading like a naked chart, go with a naked chart. If you get better results trading, you know, statistical data, do that. It's trial and error. You got to try stuff out, and eventually you'll just kind of fall in place of what works for you. And that's pretty much it. So we have about 4 minutes left before the session ends. The sellers are still on my end. The sellers are still very much in control. That they haven't lifted off their position at all. They're just adding more and more to their position, actually. So until the sellers get out the market, there's nothing for me, sadly.
But these are those areas I was talking about as well. You know,
we're approaching the low.
Yesterday's or today's low. This is on the on the ES, right?
That's right.
We're a little bit far off those lows, but the ES just moved into them.
Yeah,
we got these clusters over here, which I think could potentially be reached as well.
Yeah, I have that zone, that fair value gap you got just below the low. I have that marked out as well.
This one here.
Yeah, on the dot, it's uncanny. It's literally exactly the same.
Yeah. You know, I'm just looking also for confluence between multiple stuff, you know. You know, you also know what other guys are looking at. Like retail traders a lot will look at the Fib retracement levels, you know. From that low to there, we got to 78.6 there. That's why I made that green box over there. I mean, if you just had to channel from high to high, quite often this is a tip with market geometry. If you want to see where support might step in, you draw from high to low, which would be yesterday's low. Sorry, the day prior's low. Then they're all sort of lining up here, and I'd say is that a large zone? But yeah, it'd be interesting if we can get some sort of bounce there. Then that might be where this move ends. If not, you don't get a bounce, you don't start seeing green candles, and price just slices through there, then I'm afraid we're probably heading back towards those lows again.
I know. I'll be sad.
Damn.
It's so close. But that's part of the market.
It's not over yet. Like I said, we're at that zone now, and I was thinking we might get a move there. So let's see what happens.
Yeah, I'm just not seeing them let off. They're just adding to their position. They're being aggressive. The sellers. They're just they're in it. They want to get back down to the lows of yesterday. I think they want all the money right now. They've seen a very good opportunity to short the market, and they did, and they're just piling on the money. Until they get out, it's just not gonna stop. We've literally had zero, like none of them have left. A tiny bit when it spiked up in the last little area where it consolidated a bit. It kind of spiked up a little bit. A few people got out, but we're still, I've counted about almost 20,000 contracts in the seller's side right now, still in play. So we've got a long time before they get out.
That's a lot.
Sarah says, I haven't seen Robert comment in any session except the one that includes Sam. And damn right, Robert is he's like my buddy now. Me and him, we're best friends.
Yes.
He's got a special place in my heart. He always comes and cheers us on. So Robert, he's the MVP of these sessions. And we've hit time. All right. Well, that was a good session.
Yeah,
sadly, no trade, but it was good nonetheless. I think we covered a lot of good stuff. Richard,
I think
Igor,
there's going to be
always
some
a
stuff
pleasure.
setting up afterwards, but yeah, unfortunately not during our allotted time.
Yeah, I mean, these things happen.
Yeah.
All right. Well, Richard, Igor, and Robert as well. Can't forget Robert.
Hey.
Thank you. It's always a pleasure.
Cheers, Igor.
And
Cheers,
catch
Sam.
you guys soon. Cheers, everyone.
Have a good one. We'll
Cheers.
see you
Bye-bye.
soon. Bye-bye. Bye.
Hello, gentlemen.
Hi, Paul. Hi, Bruce.
Great to meet you, Bruce. Ian, lovely to see you. First time we've met, I think.
It is indeed. You well?
I am. How is everybody else? How are we coping with this week in the market?
The same as any week in 2025, I think.
Yeah.
Just volatile, isn't it? Just a bit crackers. Just trying to guess, really. Well, not guess. Trying to work out when sentiment's changing. Really, it's difficult.
Yeah. Yeah, I found I was watching a very interesting interview with just a car dealership owner in the United States, and no, it's not a car dealership. Sorry, it's a small beer maker in New Jersey that employs about 50 people, and he was definitely saying that obviously it's worrying time, but this was the most prescient statement he said. He said, "Small business owner, never before in my life have I had to read so much news, watch so much news to know here what my industry is going to look like tomorrow." And that really kind of sells what you said. 2024, it's crazy times.
Yeah. I think I've been in the money market since I was 18. I'm not going to tell you how old I am now, but when I started as a lad, institutional broking, a lot of it was flow and chatter between banks and stuff like that. And obviously, I think at the moment it's moved away from bank policy to a certain extent, and everybody's sort of focusing more on governments, and especially at the moment, it's just when is Trump going to put out another tweet, and what's it going to say? Is he going to follow through with tariffs, and is he going to change his mind? Is he going to inflict more pain? And it's great for volatility, and it's great for sort of intraday traders, but I have a tendency to take long-term positions. I swing trade most of the time, and I'm finding it more difficult to find sort of value setups, and to really be able to hold on to trades. It's you're just getting conflicting news, and I'm finding it difficult.
Yeah, I mean, there's maybe a bit of calm following Canada's reciprocal response to electricity, and that seemed to calm things down. But then again, Canada has said, probably quite rightly, that they are still responding with additional tariffs. It's mayhem. And Bruce, we've had some. It's such a pleasure to see you, Bruce. I've been watching some of your work on the streams. It's fantastic, really inspiring. So humbled to be here with both of you. There's been a few data points today with inflation. What are your thoughts on that?
Well, I think that the question I ask is would we have a correction like this without this intervention? In other words, was it somewhat cyclically preordained to some degree? And I think some analysis would show that maybe it was. Now, from a trading perspective, I'm not sure how much that matters. I have to agree with Ian. I'm not looking to take any big positions or any long-term swings or even shorter-term swings other than a few days at this point. So it's really a tactical trading environment the way I see it right now.
Yeah, I mean, it's the negotiation for crypto. And I don't know how you want to run this session, but maybe leave crypto to last. It's up to you. But the problem with crypto is, so Bitcoin has receded to essentially its primary trend line. So it's kind of make or break level, which traditionally is a fantastic place to enter, right? On the support for the primary trend. But because of all these bearish signals from the wider world and the wider market and trade wars and everything, it's like, how many buyers are going to show up here? And that hesitation potentially risks Bitcoin, which is the only kind of bullish thing in the market at the moment, the crypto market at the moment, pushing it into a bearish posture, which will just wreck the rest of the altcoin market, which is already on its back heels. So it is a very delicate situation. Ian, Bruce, do you want to start? You want to lead with what you've got today? I don't mind. What do you fancy?
I don't mind jumping in. I've actually got a setup.
One comment. I mean, you met before. Sorry, Ian. You did say something that is interesting, which is Bitcoin has been leading. It stayed strong. Well, many of the alts have been in downtrends and continuing to go down. So if Bitcoin stays weak, what's that going to do to the alts? It's not particularly bullish. I'm not sure we found a bottom yet at Bitcoin. We'll take a look shortly, and maybe Ian's going to also look at that. But I don't think, the problem is everybody was on the long side. Everybody was bullish. And then the government said, oh, yeah, we're also bullish. And that was like the end of it, it looks like, right?
Yeah, it's well, we can certainly get into that. I got some interesting charts, but whatever's going on with you guys affects me. So, Ian, take it away.
Yeah, I mean, I'll share my screen. It's not a bit of software that I've used before, so I just want to make sure that I'm sharing the right application window. Let's have a look. So hopefully you can see my screen. So just this is Bitcoin. This is just vanilla charts, so I've not overlaid anything on here at the moment. The way that I'm predominantly foreign exchange, FX. And the reason behind that is that I look at single currency baskets. So effectively, I'm looking for a weak currency to trade against a strong currency to keep it in its most simplistic terms. I use cipher pattern analysis, which is based around fib levels. And I try and combine everything in. So at the moment, yen, I'm pretty bearish on yen. And I'm looking for sort of other crosses to highlight that I've got the right view. I don't just use single currencies as overlays. I like correlation, but I don't just use them as overlays. What I do also use them for is risk sentiment. So obviously, if I'm expecting yen to move to the downside, Swiss to move to the downside, then effectively I should be bullish on stocks. And that's, like I said, that's in its most simplistic terms, that's really what I look at. But so Bitcoin's not something that I trade, it is something that I analyze. And in a post that I put out this morning, I said that 84,608 was a big level for Bitcoin. And we're not talking over the sort of space of weeks, but over the space of the next few days. And that was basically from this chart here, which is its 4-hour chart. So this pattern, and there's 4 main patterns. Postman knocks at the most opportune time. And obviously we've got a dog. So this is the 4-hour chart. So the way the cipher patterns work is that you look for confluence areas of extensions and retracements in fibs. Years ago, I was fanatical about Elliott wave, but I found that Elliott wave was too subjective. So I might be looking at a certain wave count, and somebody would say, "Yeah, that wave count correct, but it's in a corrective B, C, D, X, Y, Z formation, etc." And so I wouldn't say I fell out of love of it, and I still use it to a certain extent, but I like to use it inside of these cipher formations. And there's a great book called Trade What You See. I can't off the top of my head tell you who wrote it, but it's about cipher pattern analysis. And the great thing is, I think about a lot of traders, and especially a lot of novice traders, is that they trade what they want to see and not what is actually on the charts. And that really that sticks with me, that saying. And also what I find even now very difficult is to actually wait for the patterns to form. So you see like a big bearish move and you think, well, I really want to jump on that because I believe it's this CD leg in this this one's actually called a crab formation. I want to trade this leg lower. And then you jump on it, and what happens is you get a huge retracement, you lose your bottle, you come out, and then it moves down to the target level where you actually should be taking a long trade and not have taken the short trade in the first place. But that's enough for this sort of waffle or early waffle, because I'm sure I'll be waffling quite a lot. But so this is basically a break level. So we've got lower lows and lower highs, and then we've had this move to the upside. But in this morning's trade, this was protected. So 84,608 was this swing low from the 7th of March. If that had broken, then this pattern goes out the window. You move aside, or you reanalyze. But what we do have, and what is quite important, is when you get these confluence zones, they need to be close together. So again, trading what you see. Don't look at fib levels that are sort of, in this case, maybe 500 points apart, because you're just trying to fudge the analysis to find a trade or to get something that you want to get involved in. So this is called a crab formation. So you could basically got a 161.8% extension down to here, and a 224% extension down to here. Now, you guys or other people might be sitting there thinking, what the hell is 224%? That's nonsense. That's not a fib level. But actually, in cipher pattern analysis, there is different Fibonacci extensions and retracement levels than normal fib levels. And the most important factor is actually where they line up. So you can see here, and I don't know whether or not you can really see close up, but the 161.8% extension level is located at 74,393. The 224 is located at 74,427. Now, obviously, using those big numbers, that's about as close as you're going to get. So that looks like a really good confluence zone in Bitcoin. And that, for me, if I get a decent reversal candle formation around that level, and I'm talking about, an evening doji, morning doji star, a bullish engulfing, etc., in a decent time frame. When I say decent time frame, I'm a swing trader, so I'm looking at 3 hours plus up to sort of 8 hours dailies. So if I get a reversal formation here, then I'm looking for the potential to move to the upside. But I want correlation. I want this chart in this time frame to tell me, yes, that has scope to be a base, because there's another time frame that's saying that could be a swing low. And that brings me on to the weekly chart. So what I like to do, obviously, with the trading view charts is when I get one of these cipher patterns, I like to mirror that level, and I just do it with a black line, onto all the different time frames, and then basically look to see whether or not that lines up with another cipher formation. And we've got a 61.8% fib here at 74,310, which is 60 points off what the other confluence level is. So basically what that says to me is, yes, there's still scope for further losses in Bitcoin down to this zone, 74,350. But really, at that point, I don't want to be short anymore. And I want to be trading this leg higher. And the good thing is about when you use the correlation is that you've got an ending pattern, and then you've got another pattern that's basically saying, right, this is the next cycle, and the next cycle's to the upside. And if I take this off, so I take the fib level off, and then I just use a normal retracement tool, and I'll just use the solids. So basically what cipher pattern analysis or cipher pattern trading says, that this BC leg, even though it's a corrective leg, it should retrace 38.2 or 88.6% of the last leg lower. So immediately you can start looking for target levels. You can start looking for reversal formations. So basically the way that I would play this is that I would be looking for a large reversal formation, like I said, in a larger time frame. And then when that candle closes, I'll be placing my buy order. I'll be putting the stop loss below the pivot, and then I'll be targeting both of these levels. So basically, worst case scenario, so say I get a large candle and it dictates that I'm getting in around about 78,000, then I still know that my risk reward factor is probably going to be about 2.5 or 3 to 1. But I always trade in units. So my second unit is where I really want to get a bleeder, or where I want to make most of my money and average in. So the second unit up to 88.6 tells me I've got potential to get 6 to 1 risk reward. So obviously 6 to 1 risk reward, let's call it 2.5 to 1 risk reward, gives me 8.5 divided by half. I've got a decent trade set up. I've got sort of 4.5, 5 R on a potential long trade. So that's sort of how I analyze the market, and how I look for my setups. I know I'm not really, wasn't scheduled to talk about sort of Bitcoin, and then not to complicate matters, but then I sort of overlay analytical tools, if you like. So I overlay supply and demand levels, which I like to see coinciding either with my entry levels or my target levels, and then I have a tendency to use a bit of market profile, but only to sort of optimize entries. So that was my view, or is my view, on Bitcoin. But I know that I was supposed to talk about sort of dollar yen, stock indices, etc. So
no, I mean, obviously
we just throw everything in the mix, do we?
Part of the conversations we've been having all week with Bitcoin is the mantra has been, every day I've been bringing different perspectives to the market from different angles, different types of charts, and this is how you work out what's happening and how to trade it. And you're right. I mean, ciphers. I mean, I remember there was about a year ago there was a textbook Wyckoff pattern for Bitcoin when it was touching all-time highs, and we were like, oh yeah, I was saying to everybody, yeah, just follow this, it's all fine. But it's all good until it doesn't, and then it stops following it. So it's very important to, I mean, your pattern lines up perfectly with the current price action in terms of, it's getting the right levels, as we've talked about. We've got, the support level approaching, and it makes sense, but it's just a tool which we use, and then you have to be prepared to step back from time to time to see if the pattern's still valid. What do I need to see from the price action for this cipher to be invalidated? So you're not, as you said, focused on just that cipher or that pattern. You're not ignoring regular TA, but likewise, it can give you an insight which other people don't have, or rather, if they are also looking at the same thing, then it will follow the pattern ultimately. So when everyone's doing the same thing, so very, very helpful. Thank you so much for that. And the dollar yen, what's going on with that?
Good question. Going back to Wyckoff, again with these cipher formations, especially on a sort of intraday time frame, they can be fantastic. So a lot of the time when you see distribution or accumulation, obviously sometimes I get them mixed up. Accumulations at the top, distribution at the bottom. Is that correct?
It's the other way around.
Right. But sometimes when we get these wedge formations, so you'll see a falling wedge, and then you'll see a period of consolidation, and then you'll see a breakout of the wedge, and you'll think, oh right, well obviously the accumulation, everybody's gone early, and you see a move to the upside, and then what happens is it dives straight back into that zone, and then takes a new low, and then reverses and moves higher. And I think it's a shakeout of non-smart money when we're talking about Wyckoff and smart money concept, etc. And a lot of the time, I'm not going to say all the time, but a lot of the time you will get these cipher formations in those short time frames. So you might see an accumulation distribution zone for on an hourly time frame, and then you get that spike lower. That spike higher, and that spike higher will actually form a butterfly formation, and it confirms that the top is in place, and that there has been a takeout of stop losses and stuff like that, and then it reverses and moves to the downside. So like you're saying, Paul, sometimes to overlay different theories, as long as you don't overdo it, but overlaying different types of analysis can be really beneficial. I think we have to be careful of analysis paralysis and stuff like that, where people have too many things on their charts. But
yeah, it's these supply and demand zones. This is why multiple time frame analysis is so important, because if you get stuck to one time frame, say the 4 hour, which is a legitimate intermediate trend time frame to be looking at, and you've got this pattern, and then you set all your stop losses and your invalidation lines or whatever, however you're approaching it, and you get ready for your trade, and then you get stopped out because of a liquidity grab, because you've missed a supply zone on a higher time frame, which is typically a bit lower than where it would be on the intermediate. And that's why it's so important to have multiple perspectives, because it just puts the probabilities in your favor if you're seeing more about what's happening with the market. So you can position your entrance based off all of those analysis, as opposed to just where the supply and demand zones are on one or just two time frames. So great tip.
And also, I think, especially with a lot of novice traders, like people will say, well, what do you trade? And I will say, well, predominantly FX. They'll say, what, euro dollar? And I say, well, no, FX, because I don't want to just be looking at one product. You've got to be looking at an array of different products to really pick the best out of the bunch, really. I'm just going to quickly talk about basket analysis. So these are these single currency charts. Now DXY is obviously the dollar index, so that's already made up for us, if you like, and is obviously weighted to different products, or different dollar crosses, I should say. And then here you can see on the right hand side you've got the Japanese yen basket, which is also made up for you on the trading view charts. But along here, and I have everything in lists basically. So along here, there's different single currencies. So I'm looking at 8 different single currencies. So I'm looking at euro, New Zealand, Japanese yen, sterling, Swiss, Aussie, CAD. And like I said, I use these again to try and find formations, but also to highlight risk on, risk off. So if I see the yen being sold, then in general terms, it should mean that we're seeing a period of risk on, etc. So here, this was basically what I was looking at this morning, and again, it's sort of forward projecting.
Yeah.
There is a rule with cipher pattern analysis, and going back to Bitcoin, and the hard and fast rule is that you should not trade until the pattern is complete, which is harder to do than it sounds, especially when you see something like this. So this is the Japanese yen, and what we've done here is we've stalled at this first level, and like I said, these are not normal fib levels. Okay, so it's actually 0.341. There's 0.545, 61.8%, 78.6% are the normal fibs, and they actually make up the most common cipher pattern, which is known as a Gartley formation. But all of these other fib levels look like a different, and you might look at this and think, well, there's that many levels, you're going to find patterns everywhere, but it's not the case, because everything needs to line up. So here on the Japanese yen, for instance, we've got a 261.8% extension level down here from this wave here, and then we've got an 88.6% pullback level from here. And what I like to see when we're talking about fibs and Elliott wave patterns, etc., is basically for the wave formation to hold within this pattern. And what I like to see when I'm getting down towards the 161.8% extension is basically an area, going back to smart money concept and supply and demand, an area that's been pivotal. So you can sort of see around here that this zone, if you like, has been There's been a pretty decent pivot for the Japanese yen. So this to me at the moment is saying, well, there's a very good chance that we could see a move lower in yen crosses. And that again says to me, well, I should really be considering whether or not this sell-off in stock indices is coming to an end, and whether or not there's potential for at least a reversal or a correction to the upside, I should say, not a reversal. So getting back to normal charts, I suppose, if you like, I then want to be looking at the potential for patterns to form in stock indices, and predominantly US at the moment. So the thing that flagged this for me yesterday was actually the CAC, and it's not a product that I trade. I will occasionally trade the DAX. I've got a pal who is very active in the DAX, and if our analysis lines up, then I have a tendency to have a punt in that. But other European indices, FTSE, etc., not particularly bothered. I will trade US stock indices, but I do analyze them. And going back to the CAC, we completed here. So this is what's known as a butterfly formation. So again, it's a 161.8% extension from here. And if I drop this off and just put an extension tool on here, then you've got 127.2% here. And again, they've got to line up, they've got to be pretty close. And we saw that, and then we got this reaction to the upside. So that's immediately sort of saying to me, right, I've got Japanese yen that could come lower. I've got a European index that's telling me that I really should be flipping my bias. Can I see anything else? And that's when it starts to sort of generate other interests, if you like. So this was Germany 40, or the DAX, this morning. I was expecting a continuation. So this was actually a cipher pattern formation. I was expecting to move up in 1, 2, and then 3, and a continuation of trend. But what has happened is actually broke the pattern and moved to the downside. So again, as I was reiterating from the start, you really need the pattern to complete, because sometimes these patterns do break, and it can be dangerous trying to trade these CD legs higher, as opposed to actually trading the completion of the pattern. I know that I said that it's a sort of hard and fast rule, but sometimes, and it has to be a good technical reason. So basically, if I get a bullish signal, and I use DMARC indicators as well. So if I get a bullish signal in the 6-hour chart, the 4-hour chart, the 3-hour chart, that I should be taking longs in DAX, then I will take this CD leg, but I'll know where I want to get out. And also with the DMARC indicators, they sort of give you a timing zone to get out of the trade, as well as a level. And that's one of the reasons why I like DMARC, just digressing a little bit more. And the reason I like DMARC is that a lot of very good analysts, like that have made very decent money in years gone by, the Gann theory, it has an element of timing in it, etc. So I think you need to have a combination of timing involved in your analysis. But, and it might have broken by now, the S&P, or as most retail traders will call it, the US 500, because they're trading spread bets, was basically this, or is this pattern here. So again, I like this one a little bit more, and the reason that I like this setup more is that I've also got the wedge breakout. So this is an ending wedge pattern. It has a bias to break to the upside. We have seen a breakout of the wedge. It's come back. It's not just retested. it's actually broken through this this support level. I expected this BC leg to stall a lot sooner, and the reason I expected it to stall a lot sooner was because market profile, which should just be loading now, had an open point of control around about here, around about 5575. So I thought that basically we would be moving lower, touching the POC, and that would catapult this index to the upside. And again, the reason why you really shouldn't be trading a BC leg or the CD leg is that it is subjective. You know, if you get in here, they can offer good risk reward setups, because say if you did get in at this level and you're targeting this level, you know where the breaker formation is. So the breaker formation is basically on a move through the previous swing low. So as long as you're getting in close to the A leg, then you can still get quite decent risk reward. And sort of buying at the market now, you know, targeting this back formation at 5756 offers around about 3.6 R. So it's using a combination of analytical tools, if you like, to try and work out risk reward, and obviously risk rewards being the most important factor. What I'm also looking for is for other risk products to tell me that I'm heading in the right direction. So sort of euro yen, obviously it's a risk on product when it's moving to the upside. And this is the man that says he doesn't look at Elliott wave theory, and here's Elliott wave. So, but I'm not trading it. It's just confirmation. So, you know, can I see SPX or the US 500 moving higher? Yes, I can. In that chart pattern, do other yen products tell me that I have scope to move to the upside in risk, if you like? And here we've got, you know, wave 1, wave 2, wave 3 breaking out of channel formation. 261.8% is up here. So again, I'm using it as confirmation, and then trying to find the best setup in 48 odd products that I look at to determine risk reward, basically.
Yeah, I mean, it's so fascinating. You're definitely my cipher guy now from now on. When you're the thing is, what's going on, obviously, and how would you? Which obviously, you know, what we talk about is that it's really easy to trade like a bull run, because everything just works. Like it bounces off the 618 or whatever, and it just goes. It has a bull flag and it just goes, and it follows these patterns like clockwork. But in these troubling times, how would you say that the success rate of these ciphers and these patterns is diminished slightly when we have so many external factors pulling on it, away from the mathematics, essentially?
Yeah, definitely. I mean, the best way to play this, and I'm not playing it at the moment, but the best way to play it is to find a completed pattern that marries in with uncompleted patterns. I know that sounds a bit mystical and all the rest of it, but I'll try and explain it a little bit better. Right, DXY. So if I'm looking for stock indices, etc., to move to the upside, predominantly I should be, well, normally with risk on, risk off, I should be looking for DXY to move lower, but that's actually been flipped on its head lately. And as we've seen, because of trade wars, etc., the dollar index has moved aggressively lower. But what we did have, and this is going down to, and I don't normally go down to really small time frames, and this is a messy chart that I wasn't really going to show, but you're going to have to go in a bit further, because I'm telling you I'm a swing trader, and then I'm down to a 15-minute chart, so it's not too good. But basically, so we had this back formation, it completed here yesterday. So really what I want to be doing is I want to be looking at different patterns in different products that are completing, but I want to take the trade that is completed, if that makes sense.
Yeah.
So I'm sitting there thinking, well, you know, I'm seeing, I want to see a period of risk on, but I really want to see a product that shows a completed pattern and should move higher. So in other words, a completed pattern in Aussie Swiss at a low, then I'll be taking that without blinking, basically, because
so you're suggesting like you use these patterns in some circumstances as confirmation for an entrance.
Yeah. So I'm looking at that's perfect. I'm looking at correlation and I'm looking at confirmation. But my confirmation, the trade or the product that I want to trade and hit is the one that completes the pattern, not the one that's completing the pattern.
Yeah.
The completing pattern basically tells me how long I can stay in that trade. So a lot of the time, if I've traded, so let's go back to Aussie Swiss, for instance, because it's a good risk on, risk off product. If I've bought Aussie Swiss on a completed pattern, and then I see XPX moving to the upside, I really should be holding that Aussie Swiss long until SPX completes the bearish pattern and tells me to get out. So I'm using both of the risk on, risk off sentiment in both products to tell me to get in and get out, basically.
That's fantastic. That's such a great angle. Really.
And and a signal candle. So that, because I want my signal candle to basically turn around to me and say, right, you can enter now. There's your stop loss. And obviously it's not to be moved. The signal candle has to happen at the completed pattern. Yeah. If it doesn't happen at the completed pattern, then I don't have a stop loss. And if I don't have a dedicated stop loss, I don't enter a trade.
Right. That's really interesting. I mean, because we're always, this is the general mantra is always, the conversation always like, especially in this environment where we have a lot more risk to mitigate. It's, look for confirmation. It's not the time to be just swooping in at support without any consideration to what's happening. You need some structure, something to quantify, whether it's a cipher or a pattern or just, basic double bottom, something you need to see before entering. And this is, if you're new to trading or you're intermediate and you're just kind of not used to trading different weather environments and you've never kind of been in this kind of chaotic environment, then all of my trades, I'm enacting. So what would be usual thresholds for me to enter? I've changed those thresholds to accommodate the added risk at the moment and uncertainty. And I think that's part of the process. I mean, when you're trying, say, for example, we weren't in this environment and if inflation was steadily, improving consistently without any worries that we're going to have any issues with the dollar and all these trade wars, would you be approaching these kind of, with the dollar, when we're approaching kind of these support levels, would you approach it slightly differently if things were more rosy?
It's going to sound like I've got a lot of pals in the market, but I've been in it for quite some time. I've got a pal who always says fade in and always win. And and I've also seen somebody quite well known on Twitter do a webinar on that, and it's not a way of trading that I'd recommend or suggest. All that I'm having a tendency to do at the moment is just I've always traded around this sort of format, if you like. It has grown over the years. I use some other levels which are a little bit more complicated that highlight support and resistance. But all I'm having a tendency to do at the moment is just to downsize, basically. I'm not risking as much.
Yeah.
On each trade, and just hoping that I'm getting bleeders. I mean, I had a trade last week that I got in on a 30-minute chart, and then I looked at an 8-hour chart, the 8-hour chart basically. So I had a completed pattern on a short time frame, which is the 30-minute chart, and I had a pattern that looked like it was going to complete in a 6-hour chart, and it was, I think it was 8R. So, you know, for every 100 quid I'm risking, I've got the potential to make 800. So a really prime setup for me, and they don't come along very often at all. And I was quite lucky because as I took the trade, there was some news. There was a news bomb that came out, and it flew up, and I locked in my stop loss, and thought, well, I could sleep quite well on the back of that one. And then before I went to bed, I actually had a look, and my system actually told me to cash in profit. But I was only 2.5 hours up maximum. And I thought, no, this one's going to bleed, and it's just going to keep on going. And I really like that cipher formation, and all the news is pushing my way. And I'm happy to put a stop loss in and go to bed and leave it. And I woke up in the morning at 5:30, as I always do, and switched on my phone and had a look. And I thought, well, that's moved away from me a bit, and blah, blah, blah. And then I came down and looked at it, and I thought, what the hell? I can't believe that. But the pattern still holds, and I'm going to stick with it. I'm going to stick with it. I'm going to stick with it. And it just took out my stop loss. I mean, I scratched it. And then there's a few guys that I talked to, and they were saying, what do you think? Does that pattern, do you still expect that pattern to move to that pattern? And I said, well, I've been stopped out. My system told me that I should have got out early, and I've held on to it, and I'm out, and I'm not looking at it anymore. And it actually went down, and it took the previous swing low. So if I'd adjusted my stop loss, if I'd broken my rules and tried to sort of, you know, hold on, you know, for the death throes, if you like, then what was a winner would have turned into a loser. And I broke my rules, and I got penalised for it, basically. Yeah. So fear and greed, and that was a great example of fear. Greed. So,
yeah, there was a one of my students had planned a trade about a month ago to buy support of a relatively low cap crypto, and so the trade was, we were watching it, it was in a descending channel, and it was just working its way down, and it finally hit her first entry point last night, and it just had a little bit of bounce, because like with a lot of the altcoins at the moment, it's at like with the dollar, it's at long-term support. Now she was in profit by just a few percentage points, which in crypto isn't much. And I only glanced at the chart earlier in the evening, and knowing the weather, I just said, right, first thing you need to do, right, is you need to set an exit order exactly where you bought in. So worst case scenario, you break even and you don't lose anything, right? Because the bounce was nothing, right? And even though her profit was appropriately right, just the next resistance level, because obviously in difficult conditions like this, you're not going to wait for, you know, target 2, 3, 4, or 5. It's going to be target 1, just quick in and out when there's so much uncertainty. But it was and it was just like, right, you have to accept we're probably coming down, we're going to break even, but protect your capital, right? Follow your plan, be stringent. And then if it does happen to just Bitcoin gives us something, or we get a little bit of news out of the market which allows you to hit that take profit, then it's a successful trade. But it's so difficult, because typically for me, if I'm like buying long-term support in a crypto, I'm scaling in, I'm scooping it up, and I'm just letting it do its thing. Right now, it's even at those levels where you expect a lot of buyers to come in, they're not entering. So even though we're trying to, you know, typically this should be a straightforward, you know, looking for a reversal of any kind, but it's not. It's a different game at the moment. And if you can trade this market, any instrument right now, it's trial by fire. But if you can do it, you can trade any market in any condition.
Yeah, I agree.
We are saying to traders, like, be very cautious, and maybe you shouldn't be trading this weekend or not, but take extra measures, take extra precautions, be aware of, you know, you're in difficult conditions, but you can learn a lot, and you can really heighten your discipline by doing so. So, but yeah, challenging stuff.
One way I look at it is you have, when you're looking for a trade setup, you have a number of technical pieces of technical evidence and reasons you're getting into the trade. And so here's the ideal trade, right? All these elements line up, let's say, and then but you usually almost never get the ideal, right? So you're always having some variation to the ideal, and you want to understand where you are within that scale, I believe, as well as what's going on with the market. So if I'm normally trading here and now we have higher volatility, now I need more confirmation.
Yeah.
Now I need a stronger setup. Now I need more confluence and so forth.
Yeah,
And better
exactly.
follow through and so forth.
Exactly. That was fantastic, Ian. Bruce, what you got? What you got for us? I'm so keen to hear you guys. Because I haven't been on a stream with you guys before. So what you got?
Let me just share my screen here, get this one off of here and put the charts on. So I thought let's take a quick look at the S&P to start with, since that seems to be in the news these days. And we have a lot of volatility going on.
Oh, I think we lost it.
Okay, you got my chart, or maybe you have to accept it.
Yeah, I think it's coming. There we go. I got it. Thank you.
Okay, so when I'm looking at this situation, I don't want to fool myself, right? So I don't want to be biased, and the tendency is to be biased because just like everybody, I want to have, I'm generally going to develop some idea of what I think is going to happen, whether I'm talking about it or I'm aware of it, or even if it's in the background, right? So that is I don't want that to influence my what I see in reality. In reality being the price and the patterns, and something that cannot be disputed. Right. So what you do with those patterns and so forth is different. But I want to look and see, well, what is a fact, right? And then kind of whittle down from there. I'll do this very quickly. But so I'm going to start with the monthly, and I realize there's a lot of stuff there, but I don't want to clear it out and then put it back. So we have a reversal on the monthly. That's important, and we reached a 5-month low or 6-month low. Okay, so that is not bullish price behavior, but whether it recovers or not is the question. And so now we go to the weekly and see if it's telling us anything more of significance. And so one thing that I noticed right away, I have this orange line, is the 50-week moving average. It was tested over here, dropped below it slightly, and then quickly recovered, originally reclaimed back here. So since this retracement low, this has been the first decline to test support around the 50 moving average, which is trend support for the S&P on a weekly basis. Okay, so this is a change is starting to happen. So the real question is what happens next. So what happens next is what's going to be more telling, because the question is, this pattern, is this a reversal that's going to continue lower following a bounce, possibly, or even before a bounce? Or is this just a sell-off that is going to lead us to highs? I don't know the answer to that. I don't need to know the answer to that. So going into the daily, then I want to see, with all that in mind, then I'm going to look for a bounce and a recovery from that low, because that is the most likely longer direction. In other words, if we keep going down, we're probably closer to the bottom than the top, right? So the move up is going to create potentially a better opportunity at this point, in my opinion. But the market's not going to make it easy for us. In other words, so yesterday, people were buying yesterday, and a lot of people bought yesterday, and then we have a big pullback going on now intraday that probably scared some people out. But the question is, where are we potentially finding support? Well, one thing that I think is potentially significant is we look at the percentage retracements that have happened before, the larger ones, 9.7%, 10.9% back here in 23. The current one is 10.1%. So that's aligned with previous corrections, and therefore a potential pivot based on that. Potential pivot. Okay.
And the RSI as well
because
is in that territory
what's
again,
that?
isn't it? Where it's been historically as well. It's that the RSI being oversold about 30 coincides with those declines as well, and we're kind of there again, right? So that's additional confluence.
Yeah, so the RSI being oversold is another piece of evidence as well
Yeah.
to support a potential bounce. And so then the question is, well, what do I need to see to further confirm that, right? And we'll go into the intraday in a second. Let me just get rid of this extra information here. Okay, so we have a little bit of Fibonacci confluence here, in particular the 61.8% retracement of this upswing. Okay, so we didn't quite touch it, which means maybe we do before this is done. If we get a rally, where's the upside? Maybe to this 56.96 up to the 200 moving average here at 57.37 on an initial up thrust. That would be where I'm. So that would be a target at this point, basically, right, for a shorter swing or an intraday trade. So what is the larger pattern happening? Am I going to go long in a bearish environment or a bullish environment? Well, I'm going to go long in a bullish environment potentially. Bearish environment potentially. I want to be aware of that. Do I have a reason? Is there any confirmation of support where we're seeing it right now? We have a little bit. It's not perfect. It's not like jumping right out at me and saying, yes, this is definitely going to be a bottom. So now the question is, what do we have to see maybe on an intraday time frame? Let's look at the 30-minute chart for some type of confirmation that we might have a rally. Now, there's two ways to play this. One is you look to get in on the initial rally. The second one, you look for a first rally and a pullback, and you look to get in on the pullback. Of course, that's a safer entry. And we had that at a small scale here. So we had a breakout of, let's just say, this trend, for example. And you see the spike here, a break through the 20 moving average. And then we had our first pullback following the breakout, which is going to happen, and which is pretty weak because it's come pretty, it's retraced beyond the 78.6 retracement, which is generally 88.6 I use as well. Let's just throw that on there and see where that shows up. Less so. To see what is the characteristics of this pullback. In other words, does this show buyers in chart? Does this show buyers coming in? Or does this show sellers dominating? And my assessment would be that there's still downward pressure on this market based on the degree of retracement. That's it. Okay. Now, then the question is, when do we have further confirmation that the index might go up? So there's an entry here potentially, and I'm not saying this is a great entry on the breakout of the trend line, but let's just use that as an example. So there's a potential entry on the initial reversal signal, and then we got a pullback, and then the reversal of this pullback. So you could use the high of this 30-minute candle or 15-minute or whatever time frame you use. You're looking for some type of bullish reversal because you have a pretty close stop as well. You know if the trade's not working if it goes below the low. So that gives you pretty good risk reward because you got a lot of potential upside, right? Now, let me just draw my trend in there. And the trend lines I'm just using as a guide to give me some context. What was that?
The classic broadening wedge. Yeah.
And so one thing that I noticed right away is we have an acceleration to the downside. Now, when you have a trend progressing, if we just take a downtrend, for example, you have two basic ways it goes. Usually it starts at a low angle, and then it accelerates over time to where when you're close to bottoming, you have an acceleration of the downtrend. And that means just based on that, you're closer to a potential bottom or at least some type of tradable bounce, right? And then the alternative is it starts sharp, and then over time, the downside angle rises. and you see the change in momentum based on that as well. So you can see here we've got this, here's a downtrend originally, it accelerates to the downside and then accelerates again, okay? So that's also a piece of evidence that would support a potential tradable rally, okay? Now, the issue is not whether we have a tradable rally. The issue is we want to arrive at what are the key price levels that we want to pay attention to keep an eye on what's developing in the pattern. Okay, so that's another piece of evidence for potential reversal. Obviously, if we have a breakout above this swing high, because we have a swing low, we have a swing high, we have a higher swing low, a breakout above that will give us a higher swing high, and therefore we have a potential beginning of a trend, or at least possibly an ABCD pattern. Oops, sorry, the wrong one. Now, I did use harmonic patterns for a while, and I still do use them sometimes, but because of speed, I don't use them all the time. But what I do use is the basic fractal of an ABCD pattern. This is one of the fundamental fractals in the market. Move up, pull back, move up. Drop down, pull up, drop down. And we have various relationships mathematically between these swings that we can use to our advantage. So I'll just finish this kind of idea as a potential trade, or at least something to watch anyway. Okay, I'm not saying to trade it or anything, but it could be traded this way. So I'm going to draw my Fibonacci in here to help identify potential target zone, and also I want to see some confluence with the target that I'm identifying with this potential pattern, because ideally, I don't want to use just one indicator telling me that a price level has some significance. And many times it's not enough. Ideally, I want to have multiple confirmation, because as Ian was also saying, you know, there's also a question of, do I trade this or do I trade that? Or I got these 5 opportunities, which are the 2 I should trade? So the relative strength between opportunities, basically. Okay, so now that's the ABCD pattern, but I got to throw in my fib extension to get the proper levels. And then I'll line that up with the initial target. The initial target is where these 2 swings have a match in price appreciation. So there's price symmetry. Once you have price symmetry, you have a potential pivot. As with any pivot, it could be resistance in this case, or there could be a breakout and a continuation to the next level. That breakout could come immediately, or it could come after some consolidation or a pullback. We don't know. So this is the initial target of 5,659.87, but that doesn't work for a breakout up here, right? It's too close. You have higher targets and so forth, but still that doesn't necessarily satisfy that. So a safer entry is down here, or a breakout here and then a pullback for a continuation of the rally, which gives you potentially better risk reward on the upside. So a couple things I would be watching for further confirmation of strength would be a breakout of that trend line and holding above the trend line. And then not until up here, until we have a break above this higher swing high, lower swing high, 57.83, do we have further confirmation of a bullish reversal. So now, at the same time, I'm going to use levels that I might find in the weekly and correlate them with my intraday time pattern as well. So a daily high, if it correlates with any other level, is going to be important. Here with the 200 moving average, that's going to be important because it's a long-term moving average, and it acted as support for 2 days, and then the market busted right through it. That's bearish. So the expectation would be to see resistance around the 200 or before it reaches the 200, and then another dip due to that potentially. If the market instead rallies through that 200 with some enthusiasm, then the perspective starts to change because it's showing strength in an area of potential resistance. That's bullish, more so than it would be normally. Okay. So anyway, that's how I'm some of the ways I'm looking at the S&P right now.
I think you've touched on.
I was going to move over to the
Well,
euro dollar.
Before you move on, I'm interested to see what you say about this, because looking at that downtrend on the S&P, and this is part of the problem with the market as it is at the moment. So say, for example, you're the sort of trader who likes to wait for that swing high and then enter on the next low. At the moment, all we're getting is these singular kind of moves at each support level, and then we continue down and we reset. So people who have got who aren't front running setups are kind of locked out of the market at the moment, because you're getting the first move and then the retrace, and then market pressure resumes, and it's very difficult to get in as a result. Like you said, we still haven't had that. With that pattern, you're waiting for that higher high, that breakout high before entering, but a lot of the time it's just not happening at the moment. And what would you be?
Two things. Well, let me clarify. There's two potential entries: one on the pullback, and a reversal of the pullback.
Yeah,
that would be a better entry from a risk reward perspective, but there's not as much confirmation. There's not as much bullish confirmation. You're taking more of a risk at that point, right? But the other thing is, it's okay to stay out of the market and wait for an opportunity. You don't, you don't go pull your vegetables out of the garden in the winter. You wait for the summer.
Yeah, exactly. I think the point I'm trying to make, I suppose, is that in order for a trend to change, the momentum required from buyers, if we're in a downtrend, is quite significant, and it needs to be consistent over a period of time, whether that's 10 days or 2 weeks. But at the moment, because of all the uncertainty, you have people trading, they're coming in at like key support levels or key fib levels, and they're buying, but then they're getting out straight away after that singular move. And the reversal pattern never has chance to complete, because there's just not enough liquidity, enough buyers coming in. And obviously it's a slightly different proposition here, but this, I think, is the challenge at the moment. This is why the market keeps going down, because there's not enough certainty. I mean, we just want maybe 2 weeks of no crazy news, and then some of these reversal patterns will start to form. I mean, is that how you guys see it as well?
No, I think that, I'm a technical trader, and I try not to add the news into that myself. I like to see what the market does and what the market reaction is to something. Because, in many cases, the news is just noise.
Yeah.
It's just a lot of noise that's going to confuse the facts being what price is actually doing. We can see what price is actually doing. And, sometimes positive news, you have a negative reaction, vice versa. So but this is all relative also to how somebody approaches the market and the time frame that they're approaching the market on, right? And this is why you need further confirmation to any type of signal. So when I look at the 30-minute and I'm looking at reversal, then I need to have further confirmation on higher time frames that we have a more significant bullish reversal. If we're having a 30-minute reversal, that's not a full trend reversal, right? That's a 30-minute trend reversal.
Yeah. There was a.
So if you're getting at, it's hard. It is, and also, maybe you don't want to be buying bounces in a downtrend. Maybe you're not that kind of trader. Maybe it doesn't fit your style or whatever. Then you don't look to do. You wait for a more a clearer reversal pattern of some sort. Yeah, and maybe you're going to miss it, because when we turn, we could turn fast, or we could turn on a gap. But that's the way it goes. That you're going to miss it, and so what? You wait for the right situation. That's the most important thing.
Yeah,
it's the right situation, meaning everybody's got a slightly different right situation. We don't all agree on that.
Yeah, I think it's that I don't try and catch knives. Essentially, I wait you know, for those at least some I don't wait for like a couple of legs in the pattern. I'll get in once I have bullish confirmation. But right now, I think a lot of traders are not seeing the signals which they're used to, because we're just going down, bounce, down, bounce, down, bounce. And even at long-term support, you know, we're waiting for those reversal patterns. But because everyone's so hesitant, it's, you know, it's is this going to complete? Is this pattern going to complete? And it goes back to waiting for that confirmation, waiting for that pattern to complete, and adapting your approach. There's a question from Sarah Walker. What's the best way to automate my trading strategy while maintaining discretion? Anyone want to get that, or shall I have a go?
Could you repeat that? I didn't hear that.
Yeah, so the question was, what's the best way to automate this her trading strategy while maintaining discretion, which is essentially how do I still be flexible and nimble and use my own analytics to make changes whilst essentially having a plan to follow?
Not really talking about the sort of completely automated trading system, I take it, but more sort of. I believe personally that you have to have. I know that Bruce was saying there that news is noise. Yes, I agree with that to a certain extent, but I also think that news moves markets. So you definitely have to be aware of large data points like today. You know, we've had US inflation. If I'm looking for a change in sentiment, I want an economic driver that has the potential to do that. So I think today, if you're looking for a base in S&P and you've got lower inflation data coming out, then that's a good catalyst. I'm 90% technical and trade patterns, but I always like to have that news overlay, if you like. With regards to Sarah's question, I think to keep something as systematic as possible is the only way that I can sort of personally make money. And when I say as systematic as possible, you know, for me, it is hunting out patterns. It is looking for the best possible entry using sort of, you know, my system analysis, and then it's, you know, getting back to basics. Just what is the R level? What is the risk reward? Do I catch knives? Yeah, I try to. I don't mind catching knives. That's where you get the best risk reward setups, and that is, to be perfectly frank, that's all I'm concerned about, is what is the R rate, which is the risk against reward. What can I potentially get out of this? Does everything line up with my system? Yeah, if it's counter trend, then I'll have a tendency, as we said earlier, to sort of reduce risk. When I say reduce risk, I'm not reducing where I'm taking the trade or taking the profit or putting the stop. It's just the percentage of my account that I'm putting on the table. Yeah. But with regards to Sarah's question, just try and get a systematic approach to trading that tells you where to put your entry, where to put your stop, where to put your target. And with regards to being discretionary, does that mean that you're going to change your mind every time that you put on a trade? If that's the case, I wouldn't put it on in the first place.
I think I'm hoping that
I have a couple comments on that. You know, one thing you can do is you can set up a strategy that triggers something that needs an approval. So it sends you a signal, and you have to agree whether you take the signal or you don't take the signal. But as Ian was saying, you want to be very clear what your strategy is and what your parameters of your strategy is, so you're not doing discretion when you should be doing systematic according to your system. The other way is you can wait for alerts, and you can look at opportunities based on those alerts and then make the decision to buy or sell.
Yeah, it's having a plan but not just for, you know, the way you want the trade to go. You need to have a plan for the other eventualities, and therefore you have control and discretion then, because you're essentially saying, well, I said if we go below this invalidation line, then I'm going to do this, and then have your plan and draw lines in the sand in terms of, you know, as you know, Bruce was saying, facts are so important, right? You've got your facts. If you don't have the fact you want, or the threshold is you want, or the thing is you want, then draw a line in the sand. Say, if this happens, I'm going to do this. If this happens, I'm going to do this. And then you have choice, you have control, but you've also following a stringent plan as well. And just plan for every eventuality, even the apocalyptic scenarios, which we don't often see. And that gives you control over your trade. And the other question, I think, was, please go on, Ian. Thank you. Sorry, Bruce. Sorry.
I was just going to say, Ian, and you just did that, right? I was looking at a potential trade it down to. That's not in my system.
Yeah.
Right. That's not in your strategy. That's exactly what you want to do. You want to know what is and what is not.
Yeah.
So you know what you do, and you know what you really don't want to do.
Yeah, and there's a Litecoin trade which I put in on Friday, which I put the order on the exchange, but I didn't. It was a short trade. It played out perfectly, but I didn't actually enter because my strategy under these conditions means that I need my entry point in an exact place I can control if it goes the wrong way. So I missed the candle came up and it just missed my entrance by a couple of Satoshis, and then it carried on, but I didn't chase it because my original analysis said that in order to combat any risky scenarios and a reversal here, because it was a long position traditionally. I was just shorting the bearish signals in the market, but I didn't enter and I didn't chase it. So the trade was as predicted, but it was a little bit more bearish than I expected it to be. So I didn't get in, but that's fine. I've lived to fight another day. No harm, no foul. And this is, I suppose, the way you need to approach it. And there's another question. I just closed the position without any loss due to the current market conditions. What do you think I should do next? Look for another trading opportunity or wait for more clarity? I think the answer is obvious there, right?
Yeah.
Just
wait.
wait
Yeah.
for if it's a long trade, reset, figure out what the bullish signal is you're waiting for, or the bullish signals you're waiting for, and then wait to see if it happens.
Yeah.
I think since he's asking the question about clarity, then the clarity would be the more important component, because your assessment of the market environment, you know, I mean, how good are you at that? If I get 5 traders in the room, they're not all going to agree on that market environment. So that's harder to do. So I think you want to have clarity as far as what you need as a trader in order to have clarity.
Yeah, I like what Bruce said there as well. Trading's a very lonely business. You know, we all sit in not cubicles but rooms on our own, and you know, loft rooms and garden offices and stuff like that these days. And you know, back in the day, guys were in trading rooms, and they were, you know, in offices, and they bounced off each other. And you know, one guy might be trading DAX and one guy might be trading Bund, but effectively, you know, they're trading the same markets and there's correlation. So, you know, you talk to each other and you'd say, you know, I've got this setup. What do you think? Does it line up with what you're expecting? And Bruce is just saying, you know, you get 5 if he's got, you know, into a trading room. Sometimes it is good to bounce ideas off with other people. And you know, I trade with Palamine Khalid and another guy that I mentioned, Lee, who trades predominantly DAX. But we're constantly talking to each other. Not constantly. Not you know, we don't. It's not the first person I call in the morning and stuff like that. But you know, if he's got a trade set up, it's straight onto Discord, or it's straight onto Skype, or it's straight onto WhatsApp. You know, what do you think of this? Are you seeing risk on? Are you seeing risk off? And sometimes it's just nice to have that added confirmation. You know, that ease that somebody else is seeing what you're seeing, or even sometimes for them to conflict you completely and turn around and say, no, you know, I'm a bear, and then flash in their chart and what they're seeing. Because because sometimes, you know, I think they say you're far better off being out of a trade than you wish you were in than in a trade that you wish you were out. So it's, you know, sometimes just sit on your hands and do nothing is the best trade.
I mean, I think it's like this sort of conversation, because obviously we all have different approaches, and I'm so eager to hear you guys talk about, like, you know, your approaches, and Ian, obviously with you as well, talking from another perspective and how to approach Bitcoin. This is, you know, this is what people should be doing. You go about your workday, put these live streams on your headphones, and if you're a trader, because you don't have to agree with me or Bruce or Ian, but you will get ideas, you'll get thoughts and additional perspectives, which will hopefully improve your success rate. So yeah, absolutely.
And I think education is key. I mean, I've always been involved in sort of trader education, if you like, and I still read a lot of books. I'm reading the latest Wyckoff book at the moment. I've just finished reading an old pal of mine who used to work at Credit Suisse, Steve, his book on trading psychology. You know, I read a hell of a lot. I listen to what other people have to say. I wouldn't say you take it all in, but as long as you've got that knowledge base inside, and then sometimes when you're analysing the markets, you'll suddenly say, oh yeah, this looks like one of those distribution zones that, you know, that these guys were going on about, and I can see an inside cipher pattern in that in there, and I can see a bearish Elliott wave count in there, and, you know, suddenly you're formatting a trade plan. So yeah, education is definitely key, but don't believe everything you read either, I suppose. Be careful of certain gurus and stuff like that.
Yes, gurus, be wary. Bruce, you got Bitcoin. You're saving me at work today. What's your perspective?
So, you know, the thing that I'm looking, I think, that has potentially some significance is the breakdown of the double top, the retracement back to test resistance tested at the 20 moving average, 50 moving, the orange is 50, the purple is 20, 50 moving average, 20 resistance, 20 resistance, 20 resistance, breakdown through the 200 moving average for the second time, staying below it, and now testing as resistance. That is a behavior of a progressing bear trend, but it depends on what happens next. And we're in a weird area here because we got a bunch of potential support areas, but we also have this downward pressure illustrated by what I just mentioned. Now that will start to change if there's a rally above today's high, it looks like, because that will put Bitcoin back above the 200. That doesn't clarify anything other than it removes a little bit of downward pressure. You still have the resistance at the 20 moving average. So that's number one. Number two is then we look at where is it stopped. Well, we have a trend line. It stopped right at the trend line. So it's recognizing a line. This is something I'm looking for too, is how does the market recognize the various levels that I've identified? And a trend line is a good example because it's a dynamic line, and you can see here it's not confirmed by anything else really I have on there right now. And the market has bounced off it yesterday and bounced off it today. Now, I'm not going to use the line as a signal per se. I need to have other confirmation, but it does tell me that this trend based on this line, this angle is holding up, and it's got 1, 2, 3, 4, 5. This is the fifth touch. Any more than 2, it strengthens the significance of the line. Therefore, it has a greater chance of being support again, but also the breakthrough becomes potentially more significant as well. So in this case, if it breaks through the line, it's got the more obvious one is this previous resistance becomes potential support, along with the 62% retracement. So that zone right there around 74 to 72 or so, that would be the more important support level to hold, in my opinion. If it goes below there, we still got a bunch of support in this range right here. But the recovery, the deeper it goes through different levels, then the potential recovery starts to change in my mind as well. It's going to take longer to get people to come in, maybe take longer to get an uptrend back in place, and so forth. But the other thing I think that is useful, if we look back at the corrections, the larger corrections, if I think I should still have the major ones on here, in this uptrend that we're currently in, this decline has been 30%. 33% before, 21% before. So we're right, based on that, at least based on the last one anyway, the retracement is kind of around where you would expect to see support. But if it goes down a little lower to that range, that probably puts it around the 34, right at the 34 range, which would match of this. So now, why do I give that weight? Because two things we can see here is the relationship between the declines are going to tell us something about relative strength or weakness, potentially. The other thing we have to keep in mind is we're in 1 up, 2 up, 3 up. Many times market moves in threes. Once the 3 is done, something else starts to happen. So that's what I would say about Bitcoin. Beyond that, I don't know what's going to happen to Bitcoin. Now let's look at the weekly and see if that tells us anything additional. Other than the obvious, which is bearish, but it has a potential, and it's still early to end with a bullish candlestick pattern. But we have a little ways to go before that happens, and then the monthly not really telling us too much. So this is really a consolidation type environment still, I would say, on Bitcoin.
Yeah. Can I that's really interesting. I mean, it's let me we're obviously running a bit low on time, and I'm very happy to have your guys perspective on the Bitcoin market today. I think it serves everybody well. I've got plenty to talk about later in the week, but can I just show you one chart to kind of answer some of those questions? Is that okay?
Yeah.
So thank you so much for that, guys. Let's just see if I can do this, and then there's another question to answer, and then that can be it, I think. So let me show you this. Can we see this chart?
Yeah.
We got it? All pink? Okay. So this is I'm not an expert on this, but just to clarify, the M2 is a broad measure of the money supply, including currency and various sorts of bank and money market mutual fund deposits that are relatively liquid. And basically what we've got here is you can see the correlation, and there's about a 10-week lead from the M2. And there's just, again, to try and assess outside of the basic TA is, we have a 10-week lead from the M2, and it looks like Bitcoin could be following it. And this is just one additional perspective to get an insight, especially because there's a lot of institutional money now in Bitcoin. These things need to be looked at to try and figure out, not just with the TA, but obviously the other driving forces behind the market, institutional investors, and just the general flow of the money across the broader markets. So, with a 10-week lead, we should be maybe starting to see, based on this singular chart, a bit more correlation. If we get some correlation, we should hopefully start to follow it again, which obviously is bullish, and that lines up pretty appropriately with the long-term kind of outlook. So this is a chart I showed yesterday, which is just 2-year period, 2023 to 25. And now we've got, and we're looking at previous historical price action. And obviously these are just going to give us an insight, but here is a bit of a decision zone right now. And the problem is, of course, who's going to come in at this point with this level of it's going to be a lot of buyers, but we need to see, as we saw here, we need it to come down. We need it to give us confirmation, as we've been talking about, a higher low or a double bottom, whatever, and then the market will hopefully go if the conditions allow it. Right now, we need to be, talking about controlling what we're doing and drawing lines in the sand. Just try and find lines in the sand to trade off, and realize that, okay, Bitcoin's at a risky proposition here. If we come down, as we said, you know, it could take not just days to recover, but weeks if we lose these primary trend lines. And so essentially, we said yesterday, we're looking for something like this, you know, some kind of bullish signal before entering, just like we got down here. And that's kind of the state of the market. And that's the question which I think we've just got. I'm just going to really mess everyone's screen up just for a second. From how can we predict when the market is about to shift? Well, as so my mouse has stopped working. That's extremely helpful. As Bruce was saying, you know, we're looking for facts. The market will reflect the sentiment to a degree. And even though you want to be looking at charts like I just showed you with the money flow to understand kind of what's happening, and you know, that's one bullish signal. Now we need to see something with TA before we move upwards. But this is the whole game. And if you are trying to figure out what's happening with the reversals, when the market will change, ask yourself, what news do we need to see, right? What do we want in terms of policy, given that a lot of the bearish sentiment is driven by policy at the moment? What do we need the dollar to do? Because obviously the dollar impacts, you know, certain assets more than others, risk assets especially. And then what do we need to see from the TA? And if we're not seeing the patterns we want from a TA to give us that bullish confirmation or bearish confirmation, which we can trade off, then it is just a waiting game. I mean, anything to add about that just simple summary, guys?
Yeah, going back to sort of, since we're sort of stuck.
Yeah, I think that you know, what you're saying basically is, given all the things you could look at, you want to have some clarity determined by you're looking, you know, basically, you know, there's something in technical analysis called the weight of evidence. So it's similar if you're going to investigate a crime scene. You take each piece of evidence by itself, independent. Then you look at the board, you see how many bullish, how many bearish pieces of evidence. Maybe, and then you want to, so you want the market to tell you what you should be doing, if anything. And mostly the market's not telling you what to do. Most markets are not giving you good signals of what to do most of the time. That's why we're waiting for those situations to evolve. And
is ultimately what we were talking about earlier, because when we've got such hesitation, it's, you know, this is you know, Bitcoin is bullish. We have obviously this support level here as well, but this primary trend line has been for 2 years. And when the market's like this, if we get pushed below here, I'm not suggesting that the bull run will be over, but it's going to be a serious setback because sellers are going to see this break, and it's going to take a while to recover at the very least. And this is kind of problematic because Bitcoin, of course, is a de-inflationary asset which operates to a clock to a degree based on the halving and those things. So the bear market does also, you know, the ticking clock, the countdown clock for the bear market, which is the 18 months which precedes the halving and so forth, a couple of years which precedes, is, you know, we can't wait till December, ideally, for Bitcoin to take the next leg up, as you saw here. So it's very dangerous territory at the moment. Everything's still bullish, but I think if you look at the altcoin market and the fact that we're just not getting, you know, we're just getting pumps and then resets all the time, despite Bitcoin running up. And that's problematic. So draw a line in the sand. This is what I need to see. It's like with we've been talking about Bitcoin dominance in terms of long term. If I can find the long term chart, which I probably can't now. Yeah, so this is Bitcoin dominance, and this represents the proportion of the money in Bitcoin versus the rest of the market. This is a bull run for the altcoins. This is a bull run for the altcoins. So if you're looking to try and figure out where there's a reversal, obviously look at the charts, but you also want to see what's going on with these sort of things, because when we get a change in the trend, which we almost did in November, that is when things will start to move. So ask yourself, what does Bitcoin dominance need to do if you're thinking of crypto investing, right? What does the dollar need to do if you're trading, you know, certain Forex pairs? You know, what news do you need to see? Because obviously the Australian dollar, as an example, has had some bad news because of they're getting impacted by potential sanctions as well. So it's kind of chaos at the moment. But ask yourself, what do I need to progress my trade? What do I need to enter? What do I need to see for a reversal? And then stick to it. Simple.
Simple.
Not easy.
If only it was that simple.
It is that simple.
Back to Bitcoin, just saying to finish on, since we're talking about technical levels. One thing I did like when you were showing the chart about money supply, We used to use these charts, we used to call them overlay charts. And every time you used to get a big gap, they'd come back together and then move in the other direction, so like two snakes moving around. So when you see large gaps like that, it does normally mean that either something's got to give in one direction or the other. There's a lot of guys back in the day that used to trade the DAX FTSE gap. So you'd overlay the DAX and the FTSE chart on top of each other. You'd work out how much of a percentage gap was at the extremes. You'd then wait till you saw another gap at that extreme, sell one, buy the other, obviously in percentage terms, and then wait for them to move back together. So I really like that chart that you posted up there. But also when we're talking about this support level, and we all seem to be focusing on it, which is around about 74,400, there was a previous swing high on the 11th of March 24, which was at 73,835. So very close to that level. And what was resistance becomes support. So there's more things lining up, if you like. And of course, the big level for a hell of a long time was 69,000, wasn't it? So,
yeah,
you know, there's a lot there to hold this sell-off, I think. And if you're just looking at value, I think the value for Bitcoin soon is going to be buying dips.
Yeah, difficult. So much we haven't covered, but so much you guys. I'm so happy to have listened to you guys today and giving you the space.
I've really enjoyed it. Thanks for the invite.
Yeah, it goes quick. Thanks so much.
Yeah, and we'll look forward to our next session. I think we need to end here, but thank you so much, guys. Great insight, and thanks for all the questions. See you hopefully later in the week, guys.
Yeah.
Thanks, Paul. Take care, Ian.
Take care.
Cheers, Bruce.
Thank you.
Hello.
Hey, Howard, how are you?
I'm good. Yourself? Very well, thanks. I just want to ask you, the mic, does it sound like I'm talking, you can, like, through my computer, or can you hear, is it sound pretty clear?
It sounds good to me.
Okay, great.
Sounds quite
Thanks.
clear, yeah.
Okay, is it just the two of us today? Just the...
Yeah,
No,
just
let
two
me
of
not-
us. We know a song about that.
Yeah. Okay, well, let me quickly share my screen here. Oh. You can just let me know when you can see it.
Sure.
It takes a bit longer than usual. Oh, there we go.
Oh, Michael. Hey, Mike.
Yeah, so today we had core CPI. Hey, Michael, how are you? Michael, can you hear me? Okay, he's still logging in. So today we had core CPI, which didn't do much. I'm not sure if you paid attention to the markets, but it just
Yeah. Weaker than expected. Yeah, not a whole lot really on the currencies. Kind of up and down, a little bit volatility, but nothing major.
Yeah, because usually a core CPI is like, I'm really scared of core CPI because I've seen some massive moves, and also the spreads. Obviously, that's not a problem on futures, but it's still a news event I just stay very, very far away from. Pretty dangerous. So today we just had a bit of a range, but there was an opportunity, and I would just like to share or show you the video of the trade I placed and just take you through it. So let me just have a look. Michael, can you hear me? Michael?
There's no sound that side, huh?
You can hear me, Howard, right?
Yeah, definitely, yeah.
Okay. just double checking. Okay. So let me just quickly open up this. What's the day? It's 12. Okay, you can just let me know if you can see it.
Yeah, can you guys hear me okay?
Yep, all good.
Oh, fine.
Yeah, can you? Hi, Michael. How are you?
Hey, I'm great. Sorry for had some little technical issues there. So sorry for that. You guys just jump right into it, huh?
Yeah. I'm just going to show a recording of a trade I placed earlier, and then I'll just talk to you. Yeah, and just go through the details, and hopefully that makes sense. And if there's any questions, obviously you can ask me. So I'm going to play the video. I'm going to just pause the video there. I just said there's a bearish candle on the half an hour and on the 1 hour. But if you look at the current candle, it's a bullish candle. So you may think, well, what am I talking about? Mm-hmm. I'm talking about the last closed candle. This is the candle still busy forming. Does that make sense?
Yeah.
So the last closed candle is bearish. The last closed candle there is also bearish. And the last closed candle, the 15-minute, is also bearish. And the overall trend, especially on the 30-minute, that's where I like to see the direction of the trend using this 233 EMA. So that's what I mean when I say the 1 hour is bearish, the half an hour is bearish, even though the current candle is bullish. Okay. So the one standard deviation, can you hear the video, the sound on the video or not?
Yes.
Okay, so the one standard deviation is obviously the VWAP. Okay, it's a VWAP standard deviation. Okay, so what I typically do is when I see an opportunity, obviously I trade the 1 minute, or that's my trigger time frame. That's the time frame where I like to enter the actual trade, or make the actual decision on. But the idea always comes from longer time frames. But just as a very final confirmation, I like to see the new candles. Like if I see that bearish candle and it's rejecting off that one standard deviation, I like to see the new candle actually breaking the low of the previous candle. That's just that extra little confirmation. Because what can happen, and does happen a lot, is this candle can close and the next one can just immediately push to the upside. Does that make sense?
For
Or maybe
sure.
make a little bit of a low like that and then just push to the upside. So that's why I say, like, I'm just going to wait for the candle to break the previous candle's low, and then I'll enter the trade.
There it goes.
You'll hear me close the trade on the MT4 now. Okay. Okay, so let me just quickly go back here a little bit. So I spoke about the confluences on the multiple time frames and so on, but this is very, very important. This 1 hour, do you see this candle breaks above the resistance area on the 1 hour time frame? Okay, now this was, I'm pretty sure that was pre-market. But then if you look at the very next candle, this is an inside candle after the breakout. And that's a very strong indication that this is a false breakout, right? So if you combine that, look, it's all about stacking probabilities. If I look at the fact that it failed to break out, or not failed to break out, but failed to break out. The first candle right after the breakout, it never broke the high of this 1 hour time frame, this 1 hour candle, and it closed below. So that's a false breakout. And then I combine that with looking at the other time frames as well, the half an hour, the 15-minute time frame, and that gives me a bias. And then once I have a bias, I then look for a setup that's independent of what I see here, but in the same direction of what I see here.
Right.
Does that make sense?
Of
So
course.
if I see like, okay, it's setting up on the longer time frames, as I've mentioned in the video, I want to see at least 2 of the 3 time frames showing me that, one thing is likely to happen over another. Then on the 1 minute time frame, which is my trigger time frame, I want to see a setup, like a valid setup. Maybe like in this case, it's a rejection of the 1 standard deviation. Other times it will be, maybe a breakout failure on the 1 minute time frame. But it has to line up with what I see on the smaller time frames. Now I know this is the 1 minute time frame, and many people feel uncomfortable with the 1 minute time frame, and I get it. I get it. Like, it's the 1 minute time frame. It can be very scary. You don't have to trade the 1 minute time frame. You can just scale up your time frames to whatever you feel comfortable with. So your trigger time frame can be the 15-minute time frame. That can be your 1 hour time frame. This can be a 4 hour and a daily, just as an example.
Right.
But the concept of the confluence across multiple time frames really, really makes it a lot easier to get very clear on your bias, and then also to your trigger time frame to look for an opportunity. Again, that's independent of what you see on the other time frames, but it still has to make sense. The reason why you entered the trade still has to make sense.
Right.
Does that make sense?
Yeah.
100%.
Does that make sense?
Yeah, I do a similar kind of thing with my stuff, but a little bit longer term than what you do.
Yeah, longer time frame. There's nothing. So I just want to show you what happened after that. Obviously, I took a profit when it just came below the 1 hour time frame, but it did reject there all the way down to the support level, and then it came all the way back up. But a very strong range today. So, and the other opportunity that I did not take is, if you look at this 1 hour time frame here, that was lining up with this time frame, or this the half an hour also bullish, and then on the 15-minute it was also bullish. And the entry, like, you got a breakout there, but the take profit is at the previous day's high. So what's the issue there? I like to take my stop loss at the latest pivot. Okay, so if I get like it goes down and goes back up, then I want to take my stop loss at the latest pivot. So this low there, basically. Now, if it breaks out there, and I want to take profit at the previous day's high, there's no edge in terms of risk reward.
It's like 1 for 1 or something.
Not worth it, right? Because my success rate varies between 50 and 60%. So I try, if I know that stat, and I keep taking 1-to-1s, I'm just going to spin my wheels. I'm not going to make any progress. So it makes sense to ignore those setups. I have to get something that has a potential of something bigger than that. But after it broke out there, you can see the new candle didn't break that high. It pulled back right onto the VWAP.
Mm-hmm.
The VWAP is a support level. And this candle, that's a very good entry. And then you take profit at the previous day's high. Okay, so can you see how I use the multiple time frames to determine my bias? And then on the 1 minute time frame, I look for the closest support resistance level, anything that makes sense on the 1 minute time frame that agrees with what I'm seeing on the longer time frames. And that's how I trade it. And how this can work on longer time frames as well. So anyway, that was the trade for today. And if you look at where we are currently sitting, nothing is really lining up for me. You can see on the 1 minute time frame, we are like edging towards the side, but it's making lower highs. I'm not sure if this is going to be high. If this drops all the way to the support level, then that will qualify as the latest high. But at the moment, we can't call that a high yet, a lower high, because it's still trading where it's trading. Okay, it can go up from that point. So, but if it does break the support level, then this 1 hour and the half an hour, as I said, like those two is enough for me to determine or for me to have a short bias. Does that make sense? Mm-hmm. But now the 1 minute needs to play ball. So we'll see if that's going to play out.
Yeah, for your pivots, do you have kind of a number either side of the pivot point that you like to use, like number of bars either side?
No. I look. If I, for example, say if I look for a breakout. So say for example, my entry is going to be here. All I do is I just look at the previous low, the nearest closest previous low, and that's the pivot. Does that make sense? So it's not based on a certain number of bars or anything like that. It's just it should be very obvious on the chart. Where's the previous low? And that's how I determine where my stop loss should be. Okay, all clear. Any questions, or did that all make sense?
All made sense.
Great stuff. Yeah. Howard, do you want to take over?
Yeah, let's do it. So quite an interesting day on the currency markets. Let's just get my screen up there 1 second. 1 second. Okay. Let's kick it off with euro dollar first of all, which I usually do.
Oh, I'm very curious to see. I think
for me.
Sorry to interrupt you. I'm very curious to see what happened. I think in the last conversation we had, I think there was you showed a trend on a longer time frame. I think it was a daily, and there was that dip, and I think we said it will probably go into a range. Is that what happened, or?
This is the daily time frame, so it's literally it blasted up on that breakout.
Okay, maybe it's not. It's definitely not that chart. But anyway, sorry. Continue, Howard.
Okay, yes. So for me, the trend really is up. Major trend. This is like a monthly chart going way back. Major low formed in 2022. A first leg up, and then we've seen this kind of corrective ABC move down. When you get 3 wave moves, they are typically against the trend. That gives you a bit of a clue as to which way the trend is. And this month so far, we're starting to see some acceleration higher. So weak dollar across the board. That's kind of the way I'm trading. Most of my stuff on the currency side is looking to sell dollars. So today a little bit choppy on the CPI. I think we had this kind of up, down, up again, then down again, and just chop. And a little bit of a bounce. Looks like we're settling towards the top end of the range. Got a small long position on, looking for a push through the highs, but nothing really aggressive on that one. I think for me the real action, I would say, is a little bit different from what I was going to talk about today, was on the gold market. we've been looking at this one for, the last week or so.
Yeah.
Looking for this thing to yeah. Remember we looked at it yesterday. It was going to the moon. I think it was yesterday. So yeah,
exactly.
That's gold. Yeah.
I got the trade this morning. Literally I got in just below 219.60 odd. Banked some profits already on the move. Looking to take a little bit more as we hopefully push up into the close today. So the picture on gold, obviously sort of deviating from the currencies that I was going to talk about today, which I'll come back to. Using Elliott wave, for me, we've got this ABC sequence. And ABC, they're 3 wave moves that go against the trend. So again, if you can identify the completion of an ABC move, then that gives you a pretty good idea as to what's going to happen, because the trend typically will resume.
Yeah. So sorry, Howard. The Elliott wave points. Do you use an indicator? Do you identify it yourself? Can you talk a little bit more about that?
Yeah, sure. Purely visual inspection. If I struggle to break a move down into 5 waves, then typically it's a 3-wave move. And usually if it's against the previous trend, there's a thrust before it, as there has been for gold, this kind of move up, then it gives me a bit of a strong directional bias for the next move. So what I'm trying to do really is identify completion of these ABC moves, as with that euro dollar one we looked at just a moment ago. And once I've done that, that gives me kind of then I start to zoom in on some of the the levels that I want to use to get in and place stops and targets, etc. So yes.
And how do you determine? Is it just like a rough? Do you look at maybe like key support levels on a much longer time frames, like in terms of your potential take profit? How do you determine it, or do you just look for maybe potential weakness on smaller time frames and then you decide to get out, or do you have a different approach every time, or
Good question. I tend not to use support and resistance levels for my targets. I tend to use percentage swings based on the stop level. So if my stop is, if my stop is, I don't know, $10 on gold, then I'll be looking for 20, 30, 40 kind of thing on the way up. So so it's usually related to the risk that I'm putting on rather than a technical chart level. So invariably I'm not worried too much about the market kind of struggling at a level. I'm looking for the market to go through it if my target's above it.
Okay.
As we got with the gold today. So let me see. Yeah. So I guess gold was my big one today. Dollar Canada also was another one which I've been kind of focusing on recently, looking for that one to top out in line with a weaker dollar. On the daily time frame, we got this trend line which it tested yesterday, and we got that long upper shadow, and today we started to break down. So maybe this is kind of the end of this move up from this recent swing low. So looking for this thing to start to.
But look, do you know what RSI is doing right there? Just out of curiosity.
I'm not looking at it, to be fair. And I think if you whack it on a chart, I think if you put it on these charts where you've got Sunday as well, you get false readings. So I think a lot of these indicate if you're looking at a chart which has got a little Sunday session, then I think you're going to get some dodgy readings on some of the indicators. But from my position, I'm much more of a chart reader, I guess.
It's like your charts are definitely very clean. So you obviously trade mainly just price action, right? And the waves, the waves.
And also a combination. For example, this dollar CAD one, which I went short at 144.15, I think, 144.14 there. That was obviously based upon the Elliott wave structure, which was a bearish structure from the low. That kind of broke down into 7 waves, which is usually a bearish structure: 1, 2, 3, 4, 5, 6, 7. And we had complete retracement of yesterday's news. We had that big ramp higher in dollar Canada yesterday on some news, and lo and behold, the whole thing has been reversed the next day. So I like to look for news traps. They give me an additional tool when it comes to identifying which way the market should be going. The balance of supply and demand. It tested that trend line, reversed. We've got that long upper shadow on the daily, and now it's starting to kind of gravitate towards these support levels. I think we break down on dollar Canada. And that kind of I guess to some extent that the Aussie and the CAD they've been kind of ignoring the move higher on the euro dollar and cable.
Yeah, we were saying that yesterday.
And I think we're starting to see a little bit more joining the party, if you will, a bit more broad-based dollar selling. Just flipping across to the Aussie, as we were looking at that yesterday, weren't we? So the Aussie for me. We looked at it, and I identified that ABC move from the low from the other day, and since the completion of that ABC move, we started to kind of trend a little bit higher. It's not in a hurry, at least not yet. But maybe we come in the next day and there's been a move in Australia, perhaps.
Right.
Yeah. I think to some extent these Aussie and CAD they used to be known as the commodity currencies. So maybe we get this extension of the move higher in gold, and we'll start to see a bit of catch up for Aussie dollar and dollar CAD.
Yeah, they still are the commodity currencies, but people maybe not referring to it so much anymore, but they still are really.
Yeah, I've not heard the term mentioned a whole lot lately, so maybe it always used to be, what you've got kind of blocks. You've got the M block, you've got the commodity currencies, and you've got the kind of dollar Europe. I think there is a broad-based dollar decline going. Has got underway, and I think there's only a matter of time really before these guys catch up with dollar Europe.
Look, I mean, sorry, carry on.
Yeah. So I think before I think that's probably covered all of the stuff that I'm looking at. So yeah, really dollar shorts, gold longs. That's pretty much. Yeah, that's pretty much.
That is the sorry, but that's the I can't really see it. That's the one on the top right hand corner. That's the monthly time frame, right?
Yes, exactly.
Okay.
Aussie dollars. So we've seen last month was an outside candle at the bottom of a downtrend, and now we're starting to kind of nibble higher. So, and it's also at support level as well.
I love those candles. That one there, because what did I used to call them? Eating into the shadow.
Yeah.
Because you trade into the shadow or the upper wick. It's like an inverse hammer. And then on a longer time frame, especially like the daily or the weekly, there's a decent range in there. There's a decent amount to get you to catch. Don't try to. I never used to. Well, I don't trade that way anymore. But I never used to go for all the way to the high of the previous day. I'll go I'll aim for like 60 or 70% of that week.
Yeah, because it's a range. It's kind of a bit.
Yeah. So if you get for like 60 or 70%, that's a very, very good setup to trade on. You just need to time it. If you can see that on a weekly or a monthly time frame.
Yeah.
It's game on. Definitely. That's a very good setup. That's an A+ setup in my book.
And it's right at support. It's right at big support as well. So it's
huge support.
Yeah, and I like that kind of as you say, you got the upper shadow kind of rejection, and then you get people come in looking at it at the end of the candle thinking it's bearish, and then what happens? And then we start to go higher again. This is where the real move kicks off.
Yeah, well, that's I think that's an inverse hammer, right? It's the inverse hammer.
Yeah.
So that's the name of the candlestick.
A shooting star, but at the bottom instead of the top.
Yeah, I suppose. I mean, I guess the name doesn't really matter. If someone says to me, "Hey, I'll still look," even though it's not my name. They're referring to me. Like, I guess you just need to recognize what you see on the chart. That's the most important thing. So many different names. Okay. All right, Michael. I think you can probably
Yeah,
show us.
Go for it. Yeah.
Yeah, sweet. Let me jump on here, share my screen. I was looking at earlier today UF, and UF kicked off right before this news, which I stay away from like the plague. So I was hoping it didn't just run, but of course it did, right?
I think you just shared Howard. Oh no, because Howard took up the whole screen for a second there.
Yeah, hogging the
All right.
limelight as usual, you know.
Yeah.
Okay.
Sorry. Okay. Yeah,
Sweet,
I can see it.
okay.
So
Oh, yeah, so let me go over
this.
Yeah, I'm actually going to start off with gold, right? I'll come back to that one because me and Howard were speaking about this, right? So I just want to come back to it. Now, as I mentioned yesterday, so this is my first session with you, Jenny. So I guess just to kind of explain, like what I actually have here on the chart.
Yes, please do.
So for me, this is just a template that I got one of my devs to make. And in essence, it shows me a lot of data that I kind of want to base my thesis off of, right? So for me, I am a day trader. So I'm entering and exiting positions same day, right? I'm closing my position pretty much by 3:55 p.m. Eastern, no matter what. And then I am trading order flow and the market maker structure, right? So I kind of draw this up all day, all the time, but I'm looking for some type of, in essence, when I'm deciding to place my trades, right? A lot of these areas would be key levels, right? And I stay away from these two areas right here. For me, these are peaks, right? Oops. Peak. So this is like a peak low in this particular example.
It's more like a valley.
Then obviously this what was that?
Peaks and valleys. Sorry, carry on. I think like I'm not sure if it's
right. So
there's a slight lag somewhere. I'm not sure if it's on my end or. But anyway, carry on. Sorry, Michael.
Can you guys see my screen?
I can see your screen. Yeah.
Yes, got it.
Okay. Yeah. Let me know if the lag gets, I guess, bad or something. Like, kind of cut me off here.
No, it's just when you talk, there's it's like there's you can hear there's a little bit of a breakup now. So I'm not sure. Do you also get it, Howard? Or
yeah, a little bit of a bit of a.
But it's not an issue. I mean, it's not that bad. I mean, I still get what you're saying, and I can hear most of it. So I can fill in the E's and R's and M's.
Okay. All right. Cool. So yeah, we'll I guess push forward here. Hopefully it doesn't get too bad. If anything, just let me know. And I guess I'll just give you guys back one of the screen. But just to kind of get into it, again, I'm looking for, this is my, what I would call market maker structure, right? So in essence, whoops, I can't spell today, STRU. So I'm trying to look for where, in essence, where traders are trapped at, obviously, and then I am trading this exact pattern, in essence, right? So for me, I always try to, number one is, where am I in this exact cycle here, right? So I'm staying away from this peak high and this peak low, and I'm only interested in these extra two zones here, where they break this little area and retest it. And then I'm interested in the area here, obviously. And same thing here, right? As soon as they hit this little retesting of the area. Oops.
Okay, so you're basically looking for, you count the first breakout as the first leg, and then there's a second leg, and then there's a third leg. Right? That's a classic. Sorry.
Yeah, so kind of. I'm interested in that first break and retest and that second break and retest. This could happen on the 15-minute chart. It could happen on the hourly. Those are two.
Okay, so you trade. You look for the retest, and that will be your opportunity, right? Not the initial break.
Exactly.
Okay.
I don't take the initial break, and also it has to match up with my bottom portion here. So I'll get into that in a second here, but these are my main two trades I'm looking for, right? In this exact retest area. This could be Monday, Tuesday, Wednesday, whatever the case may be. Like, this could happen on the same day, whatever it is. This is all fractional. Kind of how you mentioned yours earlier. How you said you can. Yeah. A lot of people don't like to take the 1 minute time frame. They can kick it up. You're looking for that same thing on all time frames. Same exact scenario here. Same scenario, right? So, in essence, my first question to myself is always, where am I?
I ask my question that all the time. I think I'm getting old or something. I'm like, where am I?
I need to know where am I in this whole thing, right? This is like rule number one. So I need to know, am I at a peak or am I at one of these, what I would call, this for me is level 1. And then this for me, here is, whoops.
Guys, can I just stop you? I'm just going to take a small little trade, yeah?
Yeah. Do it. Let's see what you see.
Yeah, I'll show you now. I don't really take trades this time of the day, but it's lining up. It's very slow, and I'll trade. I'll take a very, very small trade. But look at as I've mentioned, I look for 2 of the 3 time frames to line up. I've got the half an hour and the 15-minute, and it just touched that breakout level. Didn't quite break out, so I was hoping for it to break out. That's why I shared my screen, and now it didn't. You can see it closed below. It needs to break out, and I know it breaks out when I get that little arrow. It's just a little. It comes with the indicator. It tells you, okay, it definitely closed above the resistance, and it will tell you, yeah, it did close above, and then then I know. But that's not what happening yet. What happened there? Okay, so it's definitely found resistance there, and this is the 1 standard deviation. So I will be waiting for this to break out. Now, if the take profit would be at the VWAP, the 2 standard deviation VWAP. Okay, so that's definitely on. Okay, because if my risk is at the lowest pivot, which is here, and the entry, I can definitely get something that's more than a 1-to-1. But it's not playing ball at the moment. And
where
it's
would
very slow.
The TP be? Where would the take profit be?
At this 2 standard deviation.
Okay.
Yeah, so I've got the 2 and the 2.3, also 2 and 2.2. I can't remember. Let's have a look. The other one, it plays no role whatsoever. So I've got the 1 standard deviation, the 2. The 2.2 doesn't really serve any purpose. It's just for I like to see a little band. And that just kind of differentiate, like it just kind of stands out for me. I just know, okay, that's 2 because I've got the previous day's high. I've got VWAP itself. I'm like, okay, am I at VWAP? Is that the 2 standard deviation? What's going on? So I just like to have a little band there. But that's where I would like to place my profit. But okay, it found resistance and
struggling.
It's struggling. It's not giving me what I would like to see. But I would much prefer to get a short opportunity anyway. But that will not happen. Definitely not within the next 26 minutes, because again, I need to get at least 2 bearish candles. So if I can get on the 15 and the half an hour a bearish candle, and the 1 hour also looks weak, then I will look for an opportunity to go short. But then I'll need to find an opportunity on the 1 minute as well. If it ends up where that little hand is now, then that's in the middle of nowhere. So does that make sense? Just because you've got those things lining, the candles lining up on longer time frames, if you don't have an actual reason to enter on the smaller time frame, it's no trade. I'm going to have to wait for something like breaking out of the support and then retest it, and forming a nice a pivot that I can trade off or place my stop anyway, and then target the one standard deviation. Does that make sense?
Yeah, you need it to break down and then get a corrective bounce, and then you've got a pivot formed, kind of thing.
Yes, if I can get the confluence on the longer time frame. So it's all about the confluence on the longer time frame. That's where everything sets up for me. Because I won't just be trading, price bouncing off support, buy. There's resistance, sell. That's not. I mean, I've done that before, and the success rate is about 30%, maybe lower, 28%. It's not good enough. It doesn't work by itself. You do need to kind of filter out most of the, the noise, and you do that by looking at multiple timeframes. You do that by looking at longer timeframes. So yeah, you can see like we're just finding support here on the EMA, but that's not what I'm looking for. I'm just going to leave this one for now. So. Anyway, Michael, I broke your rhythm. My apologies.
No, you're totally fine. This is exactly what we're doing this for. And
yeah, I was hoping to get something, spice things up a bit.
Of course,
get a trade. But
so
we actually
piggybacking off I guess what you were saying about the higher time frames. I'm sorry. Go ahead. Let me know when you're passing it over.
Yeah, no, I just wanted to mention that we also like hovering around yesterday's high, and I just want to show you the daily time frame as well. If you look at the daily time frame, it broke the 200 EMA, which is a significant support level on the daily time frame, and it broke it pretty comfortably. So here we are in a little bit of no man's land. This can pull back all the way to the 200. Well, anything can happen, right? It can. Who knows what's going to happen at this point? It's not really at a key level. So, but the smaller timeframes can definitely guide you in terms of what's likely to happen in the short term. But on the daily itself, if you're trading longer term timeframes, it's not very clear. But I would definitely expect this to go lower to at least the support level there. Okay, that pivot there, and if it goes even lower than that, if it breaks that, then the next support will be over here. So if you look at the market, the overall market sentiment, people seem to be very nervous, especially about the tariffs. I know Warren Buffett is sitting on $325 billion in cash. So he had to pay taxes on that and also expose himself to inflation. And he still believes that's a better move compared to being exposed to the markets right now. So he's definitely bearish. And so if you look at those kind of things, but to actually benefit from that information, you kind of need to know what you're looking at on the charts, right? But right now, even if you look at this, I mean, you may or may not agree. I call this the TIS. I'm just making up names. Maybe there's a different name for it, I don't know. But it's basically like basically how it like the candle you showed earlier, that inverse hammer or Pete or Steve, call it whatever you want, but with the upper wick, and it trades into that shadow, right? Now, you have it was a much smaller shadow, but if I see that you have such a big drop and it forms a wick, and the next candle, the body of the candle fits within the wick. In other words, it closes inside the previous candle's wick. Does that make sense?
Mm-hmm. Yeah.
That's what I call a TIS. And then the probability for the next candle to go in the opposite direction is usually quite high. And here's another example, right here. Right, you have this wick. I just wish that block will disappear. But this is the candle, and then you have this wick. This is the wick, and then you have the body of the candle trading into this wick, but the body of the candle closes inside the wick of the previous day's candle. Does that make sense? And then the next day you have the opposite. Now, you could argue, well, I don't know what the hell happened there. What's that? What day is that? 7th of March? Wasn't that last week Friday? Okay, that was a Friday one.
I think that was NFP.
Yeah, that will not work too well. I'm trying to look for more examples. Here's another one here. You see, you get a candle with that upper wick, and then the next candle trades into the shadow, but the body doesn't break, or the body of the candle is within the previous candle, the candle's wick, then yeah, that's the TIS. Call it whatever you want. I just call it TIS. It sounds, but if I have to tell you what it means, it's trading into shadows. Like, really, that's what it stands for? I was hoping for something a bit more exciting.
Yeah.
But that's what it is.
As long as it means something to you, that's the thing. As long as you get
Yeah, it means that's what it means. But anyway, so there's a TIS here on this on yesterday's candle. The candle, obviously huge wicks on both ends, but the body of the candle closing inside of the previous day's lower wick, and then obviously a push to the upside today. But overall sentiment, I think, is bearish. But right now where we're sitting, it's very difficult to judge unless you look at smaller time frames, and that could guide you, in terms of what's likely to happen in the short term. But I think longer term, this could probably head much lower than this. That's just what I think. But let me just remind everybody: the markets really doesn't care what I think. It doesn't care what I think. I can think it's going to head lower, and then the next 2 weeks we're making new highs. So, but I'm just like explaining to you what I see. Yeah. All right, I
guess the main thing is, it doesn't matter what you think, as long as you've got your solid indicators and all the rest of it. You trade with your indicators, and not so much what you think or believe.
Yeah, look, I mean, the thing is, like, you need reasons. There needs to be reasons for the, why do you enter the trade? Why are you getting into this trade? Well, this is what I'm seeing, and it's not just one thing. It's a number of things, and if you have to list that against the reasons why this could fail, and the reasons why it would work versus the reasons why it would fail, if the reasons why it would work outweighs the reasons why it would fail, then does that make sense? Then the probability for one thing to happen over another is greater, and that's the whole. That's what trading is all about, right? It's about identifying probabilities. It's a probability game.
100%.
So, all right. Sorry, Michael, I rudely interrupted you because I thought I saw a setup, but it didn't work out.
You are totally fine. You are totally fine. And it's funny because you actually said a lot of the things that I say. You mentioned higher time frame, multiple confluences between time frames. You mentioned the 200 EMA. So I used all of those things heavily in my process.
Well, you great. Well, you definitely a great trader then, Michael. We do
Like,
things
seriously.
the same. Yeah, that's great.
Right?
Yeah, look, I mean,
Even
those
how you
things
just
are,
mentioned.
Sorry.
Yeah, like where am I in the structure, right? Like you said, I'm always asking, feeling like an old man, like where am I? Where am I? That's the first thing I ask, coming to the charts. But definitely want to.
Yeah.
But next up, how you have your process for that too. I want to see a pattern. Thirdly, I need to see that higher time frame confirmation.
Oh,
right?
Michael, we can't see your screen.
Oh, sorry about that. I started sharing and then I stopped. All right, what about now?
There we go.
It's loading. Yeah, okay, I can see it now. Okay,
perfect. So where am I in the structure, the pattern, higher time confirmation, then my entry signal, right? So this is pretty much my process to it. So kind of starting off with this, I wanted to go back to this gold trade because Howard and I were speaking about this quite a bit. For me, when I come to this, I can see that automatically right at the top here, when I'm looking at this particular structure, this is that M peak formation that I want to stay away from. Like automatically, I can see that, right? And then from there, let me scoot this over just a bit. The next thing I have is this. Oh, so let me back up a little bit because I was explaining something to you. So on my chart, I have a few different things on here. One is these EMAs are at the top, right? So the red one is my 13 EMA. The blue one is my 50 EMA. The white one is the 200 EMA, right? Then I have this indicators kind of jumbled together here at the bottom, but it's all into one indicator known as the TDI. So my Traders Dynamic Index. And then in essence, it's Bollinger Bands here on the outside. This purple line is like a RSI line, signature to the RSI, obviously. The red one or pink one is the signal line. And then the yellow one is my market baseline. It's like a fluid 50. And then finally, I have my static 50 line, right? So I use these two in conjunction to kind of tell me what's going on in addition to some of these numbers here. At the high right, I got my higher day, lower day, today's daily range, yesterday's daily range, weekly's average daily range, weekly high, weekly low, right? And then I have the blue dashed lines are my yesterday's high, yesterday's low, or today's high, today's low, whichever it's painting. And then these orange dotted ones is the average daily range. So I use all that information, right?
So the average daily, do you mean the ATR?
Yep, the ADR though, average daily range.
The average daily range. Okay.
I guess
I'm familiar with the average.
Not the true range. Yeah, true includes gaps, so I guess it doesn't include the gap.
Yeah.
Right.
So,
okay.
Yep.
I've never heard of the ADR.
Yep. So
no, I'm just familiar with the ATR. I know the ATR very well. Sorry.
Yeah. So this would be in essence like that would just be like a target for me, if anything. Like say for example, I could expect this to be the next major bounce area. So I got the ADR high, and then I got the ADR low. If this was a short, obviously I could expect it to start bouncing around here, and clearly vice versa. I'd expect it to start bouncing around here. So that's typically my target throughout the day, basically.
Sorry, what period ADR do you use?
So it's not really just one, right? So I got the ADR for the average daily range, so that's the range for the day. I got the yesterday's daily range, so I want to know what was yesterday's daily range. I got the WADR, which is the weekly average daily range, so over a week's time, what's the daily range, right?
Okay, so that would be a 5 period, right?
So it's basically off 5 period, but obviously based off the time frame, right? So
okay,
because it goes from daily, weekly, like today's, yesterday's, then weeklies is what I really want to know. Because in essence, it is pretty much kind of like the ATR theory in average, like in essence, because you would expect it to kind of stay right. Like, hey, this is the average true range. There's another strategy that I'm pretty much testing now, and that includes that ATR, right? Where to the point where it's similar to a breakout, and I don't want my TP to be further than the average true range of yesterday. So kind of close, but slightly different. I guess.
Yeah, that's definitely a wise move. I mean, it's not wise to try to catch something, or a move that's bigger than ATR. That makes no sense because. I mean,
exactly.
You know exactly what the average of the last number of candles have been. Let's say the 14 period ATR. If you know the average ATR over the last 14 candles is 80 pips, and you are trying to catch 120, like it's unrealistic, right?
Exactly.
You know the range is 80.
Exactly.
On Forex specifically.
For me here, like if this goes past the average, today's daily range, like the average range for today, I can expect to start taking off orders. Like anything bigger than this, it's almost at a greed point. Because like I should be at least minimum of 1 for 1 from where I got in at, right? So just to kind of zoom back just a bit and see where that would have been, right? So the trade you would have gotten, okay, so this is actually a little tight for me. If I were to have taken this, I would have took it right here on this candle, right? This would be my entry candle because this is the candle for me, my entry signal. How I asked myself number 4, what's my entry signal? It's a close above the 13 EMA for me, right? Yeah. So I would have, in essence, took this trade right here. My stop loss would have had to go below the most recent swing, so it's here, and then my target is here, right? So this is a 1.5, right? I didn't take this trade, but this is what I'm looking for. I was actually short this trade the other day, and I had to close it right here. I took this trade here, right? I shorted this. And it's so funny, right? Because when I see these trades, where there's instances where the bias has changed, and I need to be mindful that it can go the other way. There's this. I don't know if you guys watch that show, Billions.
No. Billions?
No. Okay. Yeah, it's a great show. It's a great show. It's like a hedge fund
I've never
manager.
heard of it.
Oh man, that's so crazy. Anyway,
I'll look it up. I'll look it up. You know,
guys, when I tell you it's an amazing show, you guys are into trading, you're in the space, you'll love it. It's an awesome
what
show.
really? What's it called?
Yeah. It's called Billions.
Billions.
Yeah. It's a
Was
hedge
it
fund
Netflix?
manager. So it's on Netflix too. Yep.
I'll definitely check it out.
I'm telling you now, if you watch the show, if you watch the very first episode, you're gonna be hooked. You're gonna be coming telling me on one of these sessions, like I'm at the part where, you know, it's super good. Anyway, the whole show is about trading, guys. Like they've managed to put together a real show, and it's about trading as well. It's about this hedge fund, and it's super cool, guys. So check it out. But anyway, on that show, he has the billionaire Bobby Axelrod. He has a performance coach. Her name is Wendy Rhodes. And she's basically the biggest mental game coach in the business, right? And she's always keep pumping up the traders, keeping their mind in check. And there's one point where she tells one of the traders, right, that he has to realize that, you know, when you're wrong sometimes, and you have to take a step back, and sometimes you realize what was really a short, what you thought was a short was really a long. Right. So I said all of that long thing just to say yesterday, I took this short, right, because I had a lot of confluences for me to go short on this trade, guys. So the only thing that was missing was what I didn't like. So there would have been a smaller position on it, is the fact that I don't want it to have touched this already. Right. This is my 800 EMA. I don't want it to touch it. I want it to come close to it, like this, but I wanted to miss it and come back, because in essence, I'm trying to catch the ride to this EMA the first time, not the second time, right? So that was the only thing that it was actually missing.
I mean, the main opportunity, like, what do they call it? Is it cost of opportunity? Is that even the right word? But you kind of you miss this sweet opportunity.
Yeah. Opportunity cost, I think.
Opportunity cost. Yeah, you've missed the best one. Yeah, so I get that one. Now, sorry, Michael, I just wanted to ask you. You do have quite a lot of confluences, or things that you look at. Now, out of all those things, do you have like a minimum number of your indicators that needs to line up for you to say, okay, it's game on? Or do you? Because I assume not like every single thing needs to line up, or is that the case?
Yeah, so in essence, majority of it on the pristine setups, they will line up. And then there is this aspect of, if I don't have this, let's say these 5 things, it's a hard pass, right? Like it has to have this. Like one of those would be, as you see number 3 on here, is the higher time frame confirmation. Like I have to have that, which is, you spoke about confluences on time frames. For me, to take a 1 hour entry going long, just how I would take this, I would just point it out. I would need on the 4 hour charts, which is 1 EMA as well, in which you see it is, right? Which is the red one, the red EMA here. So as long as price is above this 13 EMA, I have my confirmation, right? So I know where I am in the cycle, will be number 1. Right. Number 2 would be, I'm looking for some type of pattern. Right. So when I come out here and I see this 5,200 cross, the next thing I'm looking for is some type of W structure, right? Which in essence, it gave us.
Yeah.
You got this little structure here, close above the 13 EMA, right? So your entry's here, your stop loss is here, and your target is at the ADR high. That's how I would look at this. So this is a beautiful pattern, right?
Yeah, that's beautiful.
So I said all of that to
that's
say,
beautiful, and that's
right?
also.
This was I thought this was a short, and long ago it was really a long.
Sorry, Michael. Yeah, I just wanted to say, yeah, that's.
I'm sorry. Go ahead, Jenny.
Yeah, you can. I mean, I can see your. From what I can see, your on that last move is your 3 EMAs are definitely lining up. And you could also argue that's a bull
Mhm.
flag, right? Because you get that strong push to the upside and then the consolidation to the side, and then now the second leg. And usually
Yep.
the size of the second leg, you can expect a very similar move to the initial move before the consolidation started, right?
Mhm.
It's not obviously 100%. Okay, guys, let me show you. Can I share my screen quickly?
Oh yeah. Go right ahead.
See if we can get something, man. Because
Let's do it.
well, basically what I said to you, I'm waiting for is kind of playing out now. So let's just have a look. Oh, it's not showing. Take some. There we go.
Coming through.
Okay, so yes, now you've got bearish confluence on all 3 time frames, and we're in a nice range here. We get the breakout here. The only issue is now for me is like my stop loss needs to be quite wide. So even though it's breaking out, I would like for this to pull back and form some sort of that pivot I mentioned as you could see in the video as well that I recorded. That's what I want to see before I'd be interested. Now, if this just drops, because the next target would be the 1 standard deviation VWAP. That would be the target. But if this just drops all the way, then that's just no setup. But the risk reward ratio doesn't make sense at the moment. Does that make sense?
Okay, that makes sense. So in essence, just for clarity, this would be a pass if it doesn't give you the pullback because the R to R is off. What is it currently?
Yeah.
What is it currently? If you were to take this trade right now,
my stop loss would be above this pivot here.
Yeah, too far away.
It's too far away. And, remember, if there's a breakout, then I will wait for the new candle to at least break the low of the previous candle. So it may be close to a 1-to-1. This is not worth it. Like if I can get a pullback and a much tighter entry,
gotcha.
Then I can get a much bigger risk reward ratio.
Gotcha.
Much bigger, like 1-to-3, 1-to-4. Because this is a nice gap. But if this is just going to drop, that's going to be sad. Yeah. But
looks like that's what it's doing too. But yeah, okay, I get you.
Okay.
Some of my
but I mean, if
like everything lines up, but you need it to pull back for the R to R to make sense. And if it doesn't,
Look, I mean, you can be more aggressive. Like if the trade breaks the low, you can just go the candle before the breakout. You can place your stop loss. But just out of experience, I know the success rate really takes a hit when you do that. You're just much better off to wait for. You're just much better off to wait for something that gives you that a much better entry, and that at the same time it means much tighter stop with a bigger risk reward ratio. And this is a beautiful it's a beautiful drop, but unfortunately it didn't give me an entry. And that is like that goes back to what was that? Oh. The software just disconnected, but that goes back to what I said like early on in the call, is even when it lines up because you can see it's all lining up now. You've got the bearish on the 1 hour and the 15 minute. At least I want to get at least 2 out of the 3, as I always say. So so that's bearish, but even though you have your bias on the long term, you still need to find an entry on your trigger time frame that makes sense. You can't just enter. Like you still need to find a setup. You still need to find a setup that makes sense. Now, if this is going to pull back all the way there, I mean that would be weird. But at the moment, I mean, because this is such a sharp range, a good opportunity, and this will be the 2 standard deviation. To go long, but anyway, Michael, I've done it. Ooh, where's Howard gone? I think Howard pressed the wrong button. He pressed leave studio.
Yeah, I will admit it is. I've almost accidentally done that several times, so it is pretty close.
Okay, so. But anyway, this is not the second time that I was waiting for the opportunity. It just didn't give it to me. But you can see the potential behind it, right? You know exactly what you're waiting for, what you're looking for. It's this. It has to give you that really good entry. And luckily, this is the 1 minute time frame and the 15-minute, half an hour, and 1 hour. If this was the daily and the monthly and the yearly and the century time frame, it would have been very frustrating. But every minute a new candle is forming, so the opportunities present themselves fairly frequently. Even if it means just 2 or 3 a day, that's still a lot more than someone that focuses on much longer time frames will get, unless you look at multiple markets. But even then, so many of them are correlated. You're not necessarily going to get more opportunities just because you're looking at more markets.
Yeah.
See. Now look at the one standard deviation, which is where my take profit would have been if I did get the entry. Just a beautiful support level.
Mm-hmm.
But no trade, Michael. This is the second time I interrupted you for a trade that didn't happen. But
no, you are totally fine.
What can I do?
Totally
All right.
fine.
Sorry, we can go back to you now, Michael. Sorry about that.
Gotcha. No worries. Yeah, like I said, you're totally fine. I was interested to see what was going to happen as well. So no worries at all. And again, it's always good to hear like those, because trading can be lonely sometimes. So just to hear other confluences.
Oh man, it's a very lonely sport. It's a very lonely sport.
Like cool.
Yeah, for sure.
I get it.
I fully agree. No, I really enjoy talking to traders about trading.
Yes, as funny as that sounds, yes, it's true.
Michael, I can't see your screen. I'm not sure if you shared it or not.
Let me see. I think it should be coming in now. Do you see it?
Yeah, no, I can see it. Okay.
Yeah. Okay. Perfect. Cool. So yeah. So in essence, that would have been my everything would have been here, right? So I knew I found out where I was in the cycle, as I mentioned, right? I see a pattern here. I'm looking for that W structure off the 200. Now, I really didn't touch the 200 EMA on this particular case, but the 50 EMA is fine. It came in and touched it, and in fact, it actually did ping the 200 here, so it did touch it.
Hey, welcome back, Howard.
Oh yeah, I don't know what happened there. I got I got taken out.
You're pressing. Are you pressing the wrong buy and sell buttons?
Did you? Yeah, that must be it. Damn, I'm pressing buy. I should be selling. Damn. You
that was a good win. That was a good win, Janny. That was real good.
That could seriously damage your wealth.
Hey. That was perfect. That was absolutely perfect. I love good comedy. That was perfect.
I got something I wanted to. Actually, Mike, when you're done, I think.
Still laughing.
Go on. you get out of your system, man. Come on.
That was so good. Okay, cool. It made me think of those memes where it got like, I forget that guy, but it's like President Trump. It might have Biden and someone else, and they're like, "Did you buy? Like you said go 10,000 short, didn't you?" He was like, "No, Sleepy Joe, he didn't say that. He said, he said, are you pressing the wrong buy and sell buttons again?"
Yeah. Or did he say buy? No, he said bye.
Yeah. It's hilarious. I cracked up on those. So you just did one of those memes. Okay,
I got when you're done, I forgot dollar yen. So when you're ready, let me know.
Okay, sweet.
Yeah. Sorry, Michael. I've been chipping in all evening, or morning, afternoon, wherever you are. For me, it's evening.
Right.
But, carry on, buddy. You were talking about that setup.
So yeah, in essence, I did have the pattern, as we mentioned, on the 4-hour time frame. I do have that price is above the 13 EMA here, right? And then the last confirmation was really just to enter the trade. This closed right above the 13. That would have been a sweet spot. Nice 1 to 5. You would still be in this right now. But I said all of that to say, once again, this for me, and sometimes, right, you can have your bias can be too strong, right? So even though I took this loss on this one here, right? Because I had to close it here. So I did have a small scratch. I entered here on this short, right? Let me clear this up. All right. So was it there? Yeah. It was in at 68. It was. Oh, you know what? That's actually the wrong thing. So this was. We have to close this. I need to take this red line off, this vertical one, so I can see it clear. Then I'll put it back. Okay, there it is. All right, so we got in right here. Right, this is where we sold this. And then again, once right above the close once it closes above the 13 like it did here, I had to close it, right? Because as I mentioned all the time, this will continue to run, which it did, right? So I took a small hit on this, not too much. My stop was actually all the way up here above the swing point. So small, I call them, I mean, it's still a loss, but it's a scratch. It's not a full stop out. But my bias was still so short that I didn't even look at gold, right? I just thought it was short. And I let it go. I wasn't even paying attention to this. And it turns around and it sets up beautifully going long. Like I would be in this trade right now had I actually gave this trade a good look and not have my bias so strong on it that it was short, right?
Yeah, those are those are the nuances of trading, and it never goes away, right? It just it's just kind of part of trading forever.
Yes.
Like there's always oh, I missed that one. What you know, it just kind of never goes away.
Yeah.
But anyway,
I guess I was on the other side of that in terms of my bias has been the other way. So I guess I've been lucky in that respect that I've had the right bias.
Right.
So I'm
nice.
ready to go long. You know, I'm buying. I'm only buying. You know, when my bias is bullish.
Right. And that was the beauty of it, right? Like even after you said that, like I still didn't even give this a second look. But again, coming back to that part from the Billion show. I've even named so inside my TradeZilla when I'm journaling my trades, one of the execution tags is windy roads, right? So in the times, even as though this is difficult to change your bias and just go the other way, if everything sets up, you always have to remember that that's a possibility, right? So the times that I do execute this exact thing flawlessly, I always tag it so I can have the data on saying, hey, how many times was my bias long? I mean, one way, you know, and end up going the other way, and I was able to catch it, right? So I want to be able to tag those trades, but unfortunately, I wasn't able to catch this one today. But yeah, I want to start with this one and just kind of give you a rundown of what I'm actually looking at.
Starting, yeah, you see, you that's my fault, Michael. Starting with that one, we've got like 22 minutes left.
No,
I mean that's just like, you know, that's my fault. But anyway, so that was gold, and so I wanted to ask you a question. Like, if you look at the multiple time frames, that is the 1 hour time frame. What are the other time frames you look? Is it typically the 4 hour and the daily, or which other time frames?
No, I'm only looking at. That's a great question, right? And that's always the main thing. So I'm mainly looking at everything when I'm going through the charts on a 1 hour time frame. Then I will kick it up to the 4 hour chart to see my confirmation, right? Like that's when I say I need it to be above or below the 13 EMA on my 4 hour chart. And then every now and then I have 5 setups, right? In my playbook.
you mean your playbook, yeah. Okay.
Mm-hmm. So I have.
That's a decent amount. Yeah.
And then I just named them all, right? So I have my master trade. This is my A1 setup. I have my combo trade. This is my next best setup. 3 is my M or W off the. Oh, I'm sorry. 3, this is why I brought this up, is my ID 50 trade. So this move, number 3, that one actually does happen on the 15-minute chart. But that's the only setup that I have technically for the 15-minute. And then my 4th trade is the MOW off the 200. And then my last one is called the money trade. So each of these have their own characteristics for the most part, but all of these happen on the 1 hour chart, and I'm looking for 4 hour confirmation, except number 3. That one I'm taking it on the 15-minute chart, and the one will basically already line up. So hope that answers that question. I'm looking at the 4.
Yeah,
the 1,
that was it. You answered the question. Yeah. No, I just wanted to. I was just curious because I was just wondering, someone who trades off the 1 hour, and you do look at longer time frames, like how far out do you go? You know, you answer that question. Okay.
Yep. So I'll in essence, I'm looking for one of those 5 setups on across a different set of markets, right? So NAS 100, US 30, S&P, gold, silver, crude oil, Bitcoin. I'm only buying Bitcoin, so there would never be a chance that I would short Bitcoin. Even if my setup did come up, one of those 5 setups, I wouldn't take it. It's just too dangerous for me. Now I would if it was on the long, right?
Yeah. Because when Bitcoin decides to take off, nothing stands in its way.
Exactly.
It just kind of bulldozes over everybody. Yeah.
It's a crazy markets, those cryptos.
Mm-hmm.
Yeah, like I mean, obviously there are some coaches here who strictly focus on Bitcoin, and they do tend to focus on longer time frames, which kind of I think makes more sense for Bitcoin.
For sure.
Yeah, I don't know. I don't think Bitcoin will work on the 1 minute. I don't know. I've never tried it, but it's like a little. What have you got? Like a little heart rate monitor, you know, when you've been chased like by a lion and your heart rate goes like
right. You definitely have to put your seatbelt on, like literally put a seatbelt on.
Yeah, your seatbelt.
Yeah.
Put your seatbelt on. Yeah. So anyway, yeah, like the Bitcoin traders, they tend to focus on the longer time. That's all I wanted to say.
For sure. Yeah. So yeah, I'll look at that on the same time frame, 1 hour, 4 hour confirmation I need, and then I don't actually actively trade the peso. I actually live here in Mexico, so I just like.
Oh, do you?
Yeah.
Whereabouts?
Oh, right. I thought you were in the US.
So no, I actually moved from the US. I've been living here for 2 years now.
Oh, are you on the run, Michael? Is there something you want to tell us?
I'm actually I'm living the lifestyle, believe it or not. I do some trading, beach life. Gotta love it.
Oh, that's awesome.
Kicking it in Cancun.
Exactly.
Kicking in Cancun. Exactly. That's awesome.
It's the dream. So no, we're residents here and everything. We've gone through the whole legal process and all. This happened even before all of this stuff kicked off with the presidency and administration and all of that. So
oh, okay. Yeah. We don't talk politics in this show. There's no like
right. There's a whole other madness. So yeah, I don't actively look. I don't actually trade it. I just look at it, and the rest of them are just currency pairs. So I'm looking for one of those 5 setups to occur on any of these.
But how do you But how do you monitor them all? I suppose because there's longer time frames, you've got plenty of time, right? Yeah,
exactly. So I'll literally just start at the top, right? It takes me literally maybe 15 minutes tops to go through all of them, and then I'll set alerts for certain price levels. And
you need to do it faster, Michael. 15 minutes? That's too long, man.
Yeah.
You need to do it within 5 minutes. 5 minutes. Yeah,
look, I'll get on pretty much.
No, but when you look, sorry, man, there's a little bit of a delay, and that's why I keep interrupting you. Sorry about that.
No worries.
No, what I wanted to ask you is do you tend to find setups like most days, or do you also find like sometimes there's nothing?
Yeah,
especially because you're focusing on longer time.
I'm only taking a cool 3, maybe 4 trades a week. Some days there's no trades at all. Yeah, so on those days I'm still monitoring it and just having my level set. But yeah, I'm definitely not a trader who takes trades every single day, because sometimes it just doesn't fit any of those 5 setups.
Yeah, I trade.
And I do want to say this too, right? Because it's a little interesting, because I have what I would call I call it my bully account, right? Where this is just an account that I got a few $1,000 in. I just take trades on that haven't fully set up. you know.
Oh
how-
yes,
what
yeah.
I
Like
call
your
a
you mean like your
practical
your casino account? Is that what you're saying,
Yeah,
Michael? You've got a
yeah.
casino account,
right? So some of those
Yeah.
that just haven't quite
Let's take a
gone the
little.
entire
Let's take
way.
a little bet. Yeah.
Because I got a decent amount of prop firm accounts funded already, so it really needs to confirm the right way for me to actually take it like all the way on my main account, right? So in that case, I just take some smaller trades on the other side, but I'm strictly talking about the ones that totally fit my criteria all the way. But yeah, I'll be able to go through all of these in a decent amount of time.
Yeah, I'm curious to get your take on because you're on the Nasdaq now. Just be curious to see like what your thoughts are. I assume you didn't take any trades today because of it was quite rangy and nothing exactly setting up, especially not on the 1 hour and longer.
If I was to take this, what I would be looking to set up is I would see this 1350 cross here, right? So this kind of already gave me that W structure, right, that I'll be talking about, right?
Oh yeah.
So
that would be that would change that would set up the bias. Is that what you're saying?
Exactly.
Then your bias will be set up, but that's not necessarily where you'll enter. Is
exactly. That right? So this kind of once this happens, it starts to lock this pattern. Like, all right, this could start turning around. And what I'm looking for is it to run up a little bit. I want it to miss this 200 EMA, so I don't want it to touch it, right? Because I want to ride with it on the way to it, and then I want it to come back, retest this area, right? Retest the area like this, and then run up to this 200 EMA. If it does that, I'm all over this trade, right? My stops will go below this most recent low. That would be my entry, and my TP would pretty much be wherever the 200 is. And I would just hope that that's at least a 1 for 2, minimum 1 for 1. And then simultaneously, I would also want to see how this market baseline is, which is the yellow line. It's below this static line. I want to see it come up as well, like this, because and I want the yellow line to be above this static white line, because that's going to give me a bias that, again, they're agreeing. I need my chart and my TDI to agree. I will have agreements on my chart with this pattern, and then on the TDI, once the market baseline comes above the static for me, these both agree now, like saying, hey, this is long now. If you get you a pattern, higher time frame confirmation on the 4-hour chart, and a nice entry signal, this is a good trade. In fact, this is my A1 setup, which is the master trade, as I mentioned. This is my.
Do you have an A2 setup? Well, how do you number them? A1, A2.
So I have two A's, 2 B's, and 1 C actually.
That's
so my
cool,
my 2 A's would be again my master trade and my combo trade. My 2 B's would be the ID50 and that MRW, and then that C trade would be that money trade at the end. Now, based on which one of those happens, according to my actual risk side, right? I'm not risking my full. I'm only risking my full 1% on my A setups. My B setup, so I can risk a half to 3/4 of a position, and then my C setup, I can only risk 1/4 to a half on that.
So that's quite small. So so your risk is pretty small, right? Yeah, that makes sense, because I mean, on prop firms, 1% is actually 10%.
Right.
Because if your drawdown is 10% and you're taking a 1% risk, then it's you are risking more than what you think you're risking. So it is wise to risk like 0.5%, even smaller, like 0.3%. Like if people always say like risk between 1% and 3%.
Yeah.
That's based on like if you have $100,000.
Yeah, and you have a lot of cushion, like, right? You didn't smash in trades and you're up like 14, 15, nearly 20%. Then you got a track record, you got a lot of cushion. Then you can go ahead and start knocking those.
Yeah, then you can pull up that casino account of yours, Michael. That casino account. Put some money in that casino.
Right.
And just like put on it. Yeah.
Might want to leave it alone.
Put pedal on the metal. Yeah. I mean, I used to I also I mean, I don't do that anymore. But many years ago I used to do that. But I like having a small account and just try to blow the roof off the account.
Yeah.
You know, but like I would typically then focus on that. It would be Forex, and then I would focus on the weekly time frame, and I would look, say, because the ATR is obviously the range on the weekly is much bigger, and then I look for a candle on any one of the Forex pairs. I don't care which one, but something like Howard, that candle you showed early on your chart, that inverse hammer with that shadow. Like, what's the probability that this is going to trade into the shadow? It's extremely high, and I just want to have a little tiny piece, right? But I'm looking, like, if you look on the weekly time frame, again, say on the pound yen, for example, like the ATR is like what 150. I don't even know. I haven't looked at it for a long time, but it used to be like it's a big number. Then I'm like, okay, I just want to catch 30 pips, you know, just 30 pips. And then I'll look at, like, I'll go to the 1 hour, the 4, whatever. I'll go between, but nothing smaller. I don't think I ever went smaller than the 15-minute. And then the 15-minute for me was a bit too small. And then I'll look and then I'll just and if it, but I was literally gambling the account, because, but if the trade went against me, I would. Is this bad practice, by the way, for anybody watching? Don't do this, right? But if it goes against me, I'll just keep buying, and like I'll risk literally like half the account on that trade. But I know the probability is so high it will work. Right. Or the probability for it to work is really high. And then I used to hit it, like sometimes for weeks in a row. But it's just that one trade and I'll stop. But then what I'll do is, like, I will withdraw the money. But then you go through a streak where you just kind of keep busting the account. Like, and then you have to keep funding the account. And it happens again. It happens again. Like, oh, this is dumb,
gambling.
Man. This is,
It's fun,
that's
fun,
exactly
though.
what it was. It is. But I knew exactly that's what I was doing at the time.
Yeah, see, for me, it's totally like the same and separate, right? Because I gotta separate that side of me, because I got a few accounts, like over like 1,050,000 in like funded accounts, right? So like when I take a 1% trade, that's about 10K, right? So on my main account, I really have to be careful with that, because that's like how I'm doing all this stuff, right? Paying for all this stuff, and I gotta be super careful with that, right? And then that other account, right? On those particular trades where if it doesn't set up all the way, I'll put like 5% on it, right? And then on the other ones that do set up, that I'm taking on my main account, I'm throwing like 10% of the account on this particular, my bully account, right? Because in my mind, there's a super high probability that it's gonna go. But the crazy thing about it is, the trades that don't set up, that I'm not supposed to take, they only go some of the time, right? So it's just one of those things where you're kind of spinning your wheels. Now, the times that I do hit the 10% trades, that because I took it on, like I took the main account, those particular trades are just sometimes just getting back all of those little stupid 5% losses that you had. It's like you're still in the same spot.
Spinning your wheels. That's what.
Spin the wheel.
It makes those. But I mean, I totally get why you have that account. But as long as you don't, it's not. It's terrible when you start and that's how you trade, because you can very quickly build habits, bad habit. Like this is the weekly time frame on the Nasdaq right now. This is what I mean. So if I see. I would look for a wick, and you can find them pretty much on every single candle you can look at. But not really. I want to find a candle with a wick that there's a really high probability it's going to trade. Like last week, you see, there's the wick there. Can you see the wick there? I can see it. Yeah. So, like, what's the probability? It's a very strong bearish candle. What's the probability that it's going to trade at least? This is the weekly, so it's a big move. You just want to catch a tiny bit of that tail, you know? And the problem with this is it works so well that, you know, even on candles like this, where you have this almost like a shooting star, or, you know, hangman, whatever you want to call it, there's also that wick to the upside. It's going to give you something in this upper shadow, you know. Now, you can either gamble it, but if you're sensible, don't gamble. It's not you will end up on the wrong side of it in terms of your balance will not where you want it to be. But if you're sensible and you try to time it on the smaller time frames, and you're not greedy, you just want to take like a decent, or like a 1 to 2 or something like that. 1 to 2.5, 1 to 3 would be great. And then that's it. But then that's it for that setup for the week, and then you wait for the next week.
Yeah, it can give you that larger time frame thing that that can say, okay, I've got my bias for the week, and if I see something on a smaller time frame, then go for it.
Yeah.
See, and this is literally that exact point. The funny enough, stay right there for me, man. I can't annotate on here, but that little wick that you were talking about, if you guys can imagine, if you can imagine, if you look to the left, right, you have that M structure that I draw all the time, right?
Yeah.
That's your level 1 short. That other point where because they broke and retest that area.
Oh, okay. So I see what you mean. Like, this is the break. That's the break, isn't it? Yeah.
Yep.
And then this is your retest.
Yep.
And then that's your short.
Area. Exactly. So, and the same thing for the next level too. Look at the next level as well. It's the same thing is there.
I just want to show you, because the price action also beautifully plays ball. Yeah, you get that. That's price. That's rejection, right? Upper wicks that size with the smaller body at the lower end.
Mm-hmm.
That's rejection, and then you get the second one. If it breaks that low, that would be a good entry. And then your target won't necessarily be at the 200 EURUSD. That's easy in hindsight. You can probably something that's more realistic would be to say the previous low. Would that be sensible to say?
Yep.
So then then you have your stop loss at the highest point. So that's your risk and that's your reward. That's a very decent trade. And then, as you've said, then you get the second retest.
Exactly.
And then a break
and then
back.
That one will be your 200.
Yeah, and then do you target the previous low then? So you target the previous low here, right?
Yep.
Okay, so if it pulls back for the second one, and then that's your because that's leg 1, leg 2, leg 3, and that's the cycle.
That's the end of it. I'm only taking those 2 entries. That's it.
Well, that's the end of the cycle. Yeah, makes perfect sense. Yeah, well spotted. Yeah. So is like this is another one. Yeah, right. Like the breakout. Well, I don't know
you see, now it's going the other way around. It's the same pattern, just going the other way around.
Yeah, but this one will be more tricky, right? Because this is not the same as that. It pulls back right to the breakout.
Exactly.
This you may have to. You'll probably take it. This is probably.
It's close.
This is going to be 2 entries.
Take it because it didn't
2
really
trades.
line up exactly right.
Yeah, sorry. I was just going to say you'll probably take this trade, right? Pull back, and then that would not work. But then you get a second opportunity. Yeah. Wherever your entry is, maybe you base it on when it breaks, when it engulfs that previous candle. I don't know how you work, but then.
When they close above the 13 EMA, but yeah.
Oh yeah. Okay, I don't have it on. Yeah, that makes perfect sense. So that's leg 1, leg 2, and then leg 3, and then the cycle starts again. Okay, I get you. Okay, yeah, that's very good. And then you have your all your other confluences. The TDI Fridays. We have a TDI Fridays. It's like a bar restaurant.
TDIF.
TDIF, yeah.
Right.
That's what we have, yeah. Okay, that's pretty good. But anyway, that was just for entertainment purposes, showing you like what I used to do many years ago, and I enjoyed. I think the best I ever did was taking a $4,000 account to $44,000 in like seven weeks.
Yeah,
but
nice.
But I won't risk more than that because I know what I'm doing is like it's crazy.
Yeah.
It's not. You're not going to build wealth or anything like.
What could possibly go wrong?
There you go.
Well, I'm pretty sure I can't remember. This is like a number of years ago. I'm pretty sure I gave it all back. But, I did stop because it was like, oh, this is stupid.
Yeah.
What am I doing? But anyway, guys, do you have any final thoughts? There's like 30 seconds left. Probably not much, but to say other than
great session.
Yeah, good.
Yeah,
good session.
It was a great session. Michael, it was the first time we had a session. It was really nice to talk to you. Always nice to see you. And I hope we get more sessions together. That'd be great. And
Looking
hopefully
forward.
next time when we have a live session, the trade will actually set up so I can take it in real time. But if I don't get one in the session, I'll always try to, if there's something during the day, I'll take a recording and then we can just talk about that during the session. That'd be great.
Yeah.
Hey, that's a great idea. I'll do the same thing.
Yeah, I actually recorded my gold long from this morning, but I didn't show it. So, but not to worry. Next time.
Yeah, next time we'll do that next time. Sorry. Okay. All right, guys. Well, have a great day. Yeah.
Enjoy.
Thanks, guys.
All right,
We'll speak
take
again.
care.
Okay. See you all soon.
Cheers. Cheers. Bye-bye.